Nickelodeon.
Ding ding. It's I don't have time for that. Good morning, everybody. How are we all doing? MOASS is upon us. Well, that's a nice sentiment. End of day pool. We sure do like this range. I'll tell you that much. Everything's starting off a little rough. So I don't. So I know you guys haven't gotten a chance to read the daily DD yet because I just got it out. While it's encouraging that we didn't tank hard yesterday, especially with the downturn in the market, it does look like that we used up a lot of the gas, so to speak, for our run to the upside. So I don't know if we're going to see a higher high or like a lower high right now. I think we might stagnate a little bit. Thankfully, a lot of put sellers closed out yesterday. So put call parity towards the end of the day about even. The options chain supports a move up to like 146. I just don't think we're going to see it. So it's almost more likely that we see further push down to like that 132 range that we expected, really before building up enough long interest to move back to the upside. Rig is up. Yeah, oil's moving back up. I told you guys. No, the gain's not turned down. I'm right on top of the microphone. Unless I bumped something again. Really gotta stop putting shit near them. Huh. I can bump that up a little bit, I guess. Sherwin-Williams ripping. Yep. Yeah, that was a good buy. Oil moassing. Yeah, so Biden, I think, released a statement yesterday. Or well, not Biden so much, but they passed legislation to remove the drilling rights from like national parkland or whatever it was, that Trump had previously approved. So denying the permits for drilling rights in those like environmentally protected areas. Average Joe kept bullying me. Whoa. Average Joe. That's not acceptable. I want to go up before we went down. Yeah, it's a bit sad. Close my Sherwin-Williams up 600%. Thanks to the googly eyes when you looked into it. I don't know what you're talking about. And yet somehow he shamed you into removing the Hot Body Trash Dan moniker. Are you buying back in at 132? Buying back into what? Shine on Hot Body. Oh boy. I'm glad to see that we're starting off the day with a fiscally important conversation. I have 14K to hopefully buy 100 shares of GME and BBY. Do you think the near future gone dips into the 120s to be able to fill both? It's possible we see the 120s. Although I do think we're going to find some support at 132. If we slip 132, the next resistance is 126. It's like 126.70. Why AMD straight down? I have no idea. I mean, everything's coming down this morning. It's not just AMD. Except Caterpillar. Caterpillar already doing its turnaround. Is it too late to get into Sherwin, or do we expect it to go higher? If you have to ask that question, you've already answered it. God damn, I made a lot of money. I don't know if I should hold it. Do I hold? I bought fucking June calls. I don't know what to do now. They're up massively, but their earnings were phenomenal. Like, is it just gonna keep fucking moving up? It could, right? I mean, there's plenty of room. Yeah, there's some resistance at 270, but it's like 274. God, I love trading stocks. Big tech, same like fire sale. Yeah, I don't think they're gonna stay down for long, regardless of the media sentiment. So you're welcome for the Sherwin idea. It wasn't you, it was fucking Stefan, because he said that the fucking Dillionaire song went hard in the paint. And then I was like, oh, speaking of paint, let me look at Sherwin Williams. I didn't even know it was fucking earnings. Did you get stopped out of your Ader puts yet? It's up again today. I don't know. Probably. I might have gotten stopped out into close yesterday. Yeah, I definitely did. I'll have to look. It's on a different brokerage. I have a brokerage that I use specifically for playing shit penny stocks. expecting Tesla to tank. The Twitter purchase? I mean, I didn't expect Tesla to tank with the Twitter purchase. She's saying that next time I talk about dumpsters, you're going to invest in WM. I'm just saying, it worked out. What do you think of the Twitter buyout and Elon's tweet at SEC? I think he just likes Wall Street Bet's attention. I think he just likes attention. It's okay. Elon Musk, techno king and founder of Twitter, um, free speech activist, will ensure that Twitter is the safest platform for people like workers' rights unions and politicians to voice their concerns openly and without judgment. This speech paid for by the Elon Musk Foundation. Don't worry, guys. There's always money in the emerald mine. I mean, it's not just Tesla tanking, though. It's just everything. Bezos must be fuming over Elon buying Twitter. Why? They can both silence the rights of workers together. He just has to buy his little blue check mark, right? Yeah, HD's holding pretty well. I was telling people, imagine if the Romanovs had figured out the way to manipulate society was not to wall yourself off in a castle, but to wall yourself off in a castle while ingratiating yourselves to them. Think how many other fun genetic conditions we could have if they had. We could have had superpowers by now. Oh well. It's like I never left. 132.50 safe. It's definitely like you left. No. 132.50 is not safe. If we fall to 150, I'll definitely take profit on my weekly puts. I brought protective puts on my entire position. I figured if they're going to dump the price, I might as well double my position while I'm at it. It's working out. They're up 10%, which is good because I used a lot of margin to do it. Interest rate payments will be more than Twitter's annual profit. If Twitter fails, then it could take down Tesla. Yeah, I mean, Twitter's not going to fail. It's just not that profitable. A while ago, you made a comment that I thought was hilarious. You said you got kicked out of a Whole Foods because you were wearing skin-colored pants. Was that done as a joke or unintentional? It was unintentional, and it has to do with the like weird UV, like ultra blue lights that they have in the produce section. They were actually khakis. They were just kind of a weird color khaki. Maybe they had a little too much orange in them, but um well, not khakis, I guess, because khakis implies they were a sweatpant material in a khaki color. Anyway, I was removed from the Whole Foods. Security asked me if I would please leave and that my clothing was inappropriate. And I was like, what the fuck are you talking about? I'm wearing sweatpants. It was a whole thing. I wrote about Sherwin in the Discord a few months ago, based on what I've been seeing in the industry. But I'm too poor to get a big position on it, but super happy for gains. Yes, very happy. Thank you, Rusty. I did not know that you were writing. I know a few people were playing Sherman like a couple. Well, I was too. A couple weeks ago. It had like a nice little bounce. Definitely undervalued. I never really realized it until then, like how big of a fucking company they are and how much just obscene cash they make. Superpower is being able to tell what kind of oil you made your pizza with. Like, can you differentiate between like Spanish olive oil and Italian olive oil? How much nut mix have I consumed today? 0 grams. I think it should be underestimated because, like Elon's other companies, I don't think it'll actually ever generate any value, but he'll pump the price of the stock eventually. The question is just, can you get it cheaper than $50 right now? Maybe. Hey, we found a floor. Maybe. We found some support. What is that at today, by the way? Yeah, like 132.80. Can you feed me some hopium for getting out of my weeklies today? Weeklies on what? GME? Why'd you go and do that? So puts on Sherwin for a month out. No, I don't think so. The daily bounces on BBY from low 16s to high 16s has been very profitable. Interesting. Thinking about selling a CSP with a 120 strike. Would a solid strategy pick a very long dated expiration and buy it back when the price recovers? I mean, you can do that. Why not just buy a call? God, our volume is abysmal. Um, he can tell between olive and motor oil. I mean, interesting. So just kind of like the shotgun effect. I thought Twitter was going private. If Elon's buy goes through, wouldn't that take it off the stock market? I mean, that would still mean that shareholders would have their shares purchased. Uh, just want to close the one leg. What the fuck is it doing? Don't be a shithead. My decision to hold is paying off. Huh. Is now a good entry point for calls? Not necessarily. I think we're gonna kind of just chop along this like 132, 130, 180 range. What's up with AMD weeklies? They're a terrible fucking idea 100% of the time. AMD's not a great stock to buy weeklies on. I use motor oil because of the high smoke point. That makes sense. Yeah, you don't want to smoke up your kitchen when you want to get a good sear on a steak or something. Man, I'm up bigly on these Sherwin-Williams June calls. Dude, right? Like, what the fuck? I honestly could not have expected a $20 overnight move. $25 almost. It just keeps going up too. It's like it's not even done. Definitely don't want to keep working today. That's for sure. Bottom confirmed. I think finding it. Bearish on cat today. Not particularly. It looks like it's just chopping in its channel. Good entry opportunity probably for more calls. I don't have 220s yet, so I'm still looking to pick some up. This might not be the worst time to get them. Especially if it continues to find support in this range. I don't expect any big moves over here today. Not unless we see some sort of turnaround, which isn't looking likely. So watch the market, watch the Dow, not the SPY, and look for potential entries. Jesus, how hard is Tesla gonna fall? I don't know. It's kind of just drilling for oil right now. I just had my rent jacked. They don't know they're dealing with a degenerate pigeon whale. Jesus Christ. This is like a kind of a very real sell-off of Tesla. I like this. I want. Is this chasing? I don't know. Volume's still increasing to the downside. It doesn't feel like chasing. What's a good way to make money in a bear market without short selling? Profit on the volatility or sell covered calls and sell option premium. Bear markets are very volatile, right? So there's lots of upside spikes. Whoa, my TD session just got closed out. Huh. I don't feel like this options contract is properly representing the drop in price. What's the updated outlook on Veru? I don't know. It's doing weird shit today. It looks like it's gonna climb back up above 14 again. If it breaks 15, it's gonna do things, fun things. Ooh, resistance there. Jesus, like rats off a ship. Thoughts on thoughts? Curious. I think I saw what you were talking about on the Discord, but yeah, I'm sure that you've finally figured out that some rounded bottom breakouts are Wyckoff faces. Some are. The ones that aren't are kind of dog shit, though, right? I don't know, but if it breaks this 937 support, it's gonna fucking drill down hard. Like back to the 800s. Look at my option contract value. It keeps jumping to like $600. There's got to be a lot of open interest on this strike, right? Oh, not much. Interesting. Hope Tesla goes to 800. 750 would be great. It's dropping like it's hot. Yes, it is. Thoughts on cat earnings this week? Bullish. I'm bullish on their earnings. Sherwin-Williams is an excellent example of Girk's golden rule. Always play earnings that can't go wrong. To be fair, I bought those calls and I did not know their earnings was the same day. I should roll down my 140 CCs to something lower. No, your 140s are already kind of risky. If we break 132 solidly and stay down, um, and start moving towards that like 126 resistance, um, then maybe. And we're starting to, but if we can find a floor in here and bounce, and so the risk for moving down to like, especially 135 is pretty high. God, this looks like shit. I love it. What are your current thoughts on BBBY? Let's pretend I've been largely out of the loop since RC's buy-in. It's a undervalued company and probably a good long-term investment. Breaking: rogue Twitter employee releases Twitter algo on GitHub. Oh shit. Finally gonna get all the Twitter followers I've always wanted. When are you streaming on Twitch? I don't know. Maybe tonight. Let's see. I've been working on kind of a side project for school. So I've been really busy after the stream, and so I'm trying to find time to get everything done and do other shit, but it's hard to do that and sleep. Oh, sweet baby Jesus. This is great. I don't know if you guys know this, but I hate Tesla. Also, I sold a fuck ton of naked calls at 1250, so I couldn't be happier right now. I'm in a financial engineering MBA program. What's your thoughts on Wetzel's pretzels? No, it's actually a project. It's not homework. I don't have to do it. Getting banned on Twitter, probably. Why do you hate Tesla? Overvalued? Yeah, massively. Did Tesla buy a gold mine? I don't know, but the 925 puts I just bought are about to go in the money. See, there's always another opportunity, guys. If you missed $4 gains on Twitter, you could have made $80 gains on Tesla, and you didn't even know it at the time. How much time should I give myself for an AMD entry? A decent amount. Summer. I think my earliest calls are June. When will August expiries show up for GameStop? Should be after May 20th. They'll open up. If they're not open already. Don't you dare. Dropping you, bitch. That's right. Oh. Ah. TRS is the way to financial literacy. Dude, between Sherwin-Williams and Tesla, I want to go to bed now. Why would I keep doing stocks at this point? Buying this crap at 920. Kirk's building a birdhouse. Your cat's starting to do a thing. It got rejected at 1750 though. I think it's gonna chop a little bit. Visa looks really cheap again, by the way. Around $50 so far. That's not that bad. Looks like Bill Gates can afford to close his Tesla short position now. Any thoughts on Google's earnings? I think they're going to be down a little bit, which could prompt a sell-off given market conditions. A bit more confident and sold a 160 cover call. I have to hedge the Google earnings anyway because I have CSPs sold. They're pretty far out of the money, but if I get filled on them, it's fine. But I need to hedge it a little just in case it does do a massive sell-off. Yeah, I have Tesla puts. How good was Jimmy's support at 130? Decent. I mean, it's turning around, right? Something up. So real quick. Oh, okay. But delta neutral's at 750. Fucking go. Gamma neutral. Gamma neutral's at 920. That explains why it's such a strong resistance. How do you hedge a CSP? You can buy puts. Long put. HD's pushing up too. It's already, my calls from yesterday already in the. So his wheat is for summer only versus winter wheat. Sort of, yeah. I mean, there's 4 harvests a year for soft wheat, I believe. What's on your face? My face? I mean, I don't think Rivian's going to return the results for Amazon that it did last quarter. Expected more nut riding. My Wyckoff face C spring scan. Sorry. Yeah, I'm probably shadow banned. BBY at 16 is a pretty strong support, right? Yes. This price is probably the best entry you'll get. I doubt you'll get an entry cheaper than Cohen's, which is at like 1540. So you might, but it's really unlikely. BTU up 6% today. Nice. It is. It is nice. I just let myself get stopped out of RAD, down about 40% on my leap, but willing to hold for Thursday news. Thoughts? You're down 40% on a leap? Buy it in the money or something? On $8 leaps? Oh, because the IV grinding down? The IV didn't even grind down that much. Ow. What date do you have it for? I mean, yeah, they're not very expensive. I didn't add a bit Warness about any of this. Don't worry, he will. It's just like in 6 months. My Twitter $50 puts down 50%. Any point in holding still? If $50 puts? I mean, it could drop, but probably not. This is why you set stop losses. I wonder if this can actually push down through gamma neutral. If this falls below gamma neutral, that's going to be fucking nuts. Gamma neutral on Tesla right now, 920. With delta neutral down on like the 700s. It's like 775. Roughly. I don't think this intraday model is all that strong, but yeah, 770, 67. Very testing 15. I know, I see it. I can't watch them all at once, and since these are weeklies, I have stops on Veru. But if it breaks 15, it's going to do some crazy shit. Is there a gamma minimum? 0? Okay, just so you know, RC's buy-in of 100,000 shares did not send GameStop to 185. That's that's not what happened. If we hit 770 up 13k on 925s, yeah. I don't think it's going to hit 770, but if it does, that'd be insane. I'm already thinking about buying back those covered calls that Victor convinced me to sell. Enlighten me? Oh man, that's too much. There's too many things. If you think RC buying 100k shares pushed the stock price up to $185, I don't know if I can even help you at this point. Go watch the clips of the stream going back the last 6 months. What's a simple synopsis of that? ETF compounded ETF obligations being cleared on a quarterly basis. Yeah, RC's buy-in of 100,000 shares caused 40 million in volume. Sure, fuck it, whatever. I'm game. It can still bounce back. Why is my fucking options price not up to update? Piece of shit. I don't think he was being ignorant on purpose. Just seems new. Go easy on him, Pickle. All right. It's hard to tell. We get so many fucking trolls in here. You have to be constantly on guard. If Kenneth, actually, if you want to know what happened, check out my DD wiking off for OPEX. I think that gives a pretty good synopsis of everything that we're looking at currently and what caused the run up to $100. It does want to go down. TLDR on Veru, some COVID drug, possibly maybe doing approvals for usage. They seem to have the manufacturing capabilities to provide it in large quantities. Bullish on emergency approval from the FDA. And I think they just passed their phase 2 trials in Europe yesterday. Veru's gonna do a thing now that it's over 15. I managed to lose $35 despite Sherwin running past the strike price. Bid was higher than the trade price, and I was down. Then I was up when it had to move to sell at market price. Could you explain? So your call option went in the money, but you were still down? Probably a bump in IV, or IV broke, like IV crushed. I should look at that actually because I still have my calls. Uh, it looks like it's gonna move back up. Maybe. Hard to say actually. This could kind of go either way. Maybe back to VWAP. Thoughts on May VIX puts $28 strike. You sure that's the best idea with the SPY pushing down to 420 and Tesla tanking? May want to wait. Like, I think VIX could probably run higher. You might be able to get into those cheaper. Also, shorting IV, possibly going into a market correction is not usually a great idea. Or shorting volatility. My share count increases and the underlying price stays the same. No, the underlying price is divided by the number of shares created because of efficiency in the market. The market cap remains the same, right? So if you had a $200 share of GME and they split it 2-to-1, right? The shares outstanding would split. So you would have, instead of 75 million, you'd have 100, and it's rough, but 150 million. And then, the market cap would remain the same. So you would just have two $100 shares. Yeah, I think Tesla's gonna stabilize. God damn it. Fuck you, Gamma Neutral. Fucking market makers. Trade price 6.18. Current was 6.38, and I was down. Then it was 6.0, and I was up, and then down immediate. I'm assuming that your option price isn't updating as quickly as like the options data. That's kind of what that sounds like. It just sounds like there's what brokerage are you using, JS? Options data is not always super fucking reliable. So sometimes you're better off just Black-Scholes, like running your contract through Black-Scholes and figuring out its value and just putting in a limit. How worried about are you about this market correction in relation to MOASS? I mean, GameStop's pretty fucking illiquid. It seems to have a pretty good resiliency to downside. I mean, I'm not saying that GameStop's price is going to remain stagnant through a crash, but, things recover. And it's, retail, and it's actually not like a bad bear market stock. They're pretty insulated against inflation. When does the next cycle begin? It's looking more like June. with every passing day. Although we'll see. They could build up a lot of obligations very quickly. What are you looking for a re-entry in GME calls? A confirmation of a turnaround in price action. Or a true bottom. So flat, sideways trading at a specific price. We need to find an equilibrium at the minimum and a turnaround at best. You'll play the long side of Tesla once the price stabilizes. I mean, I own Tesla shares. The current price is way above my entry on them, but we'll see. I have an odd question. When the SPY tanks and the market tanks with it, does this sympathy sell-off mean recoveries for individual stocks is easier because it was artificial? A little bit. We're forgetting that when RC bought 100K, I also bought 5. So between the two of us, we're pretty much at 40 million. I just made 22.5K on Tesla puts. I'm not that high yet. See, I'm up, I guess, almost 23,000 on these. Oh, yeah, so about the same. Congratulations, dude. Where does Gaff believe no MOASS? He thinks that the systems in place are more than capable of preventing a squeeze. I don't I don't fully disagree with him. I think a short squeeze is highly unlikely situation, but I think other kinds of squeezes can occur. And if they occur in great enough magnitude, can create a short squeeze. But I do think it will require a very specific series of events to occur. What's up, Hydra? Sherwin's starting to slip 270. I have like a 2% stop on my calls there, so I'm not super worried if it does. Veru doing nice things. Does. Good entry for XRT. Hmm. On the long side, it's not terrible. Come on. I wonder if I'm getting greedy with these and I should just take profits. I am. Wait. Sorry. That was dope. GameStop looks like it's finding its support. You roll down the Tesla CCs as well for some free money. Roll down naked calls. I'll roll down the CCs because that's, yeah, just free money. But I think I should just close the naked calls. They're almost fucking worthless. Oh, come on. Here's the problem is we still expect a bounce on GameStop, right? So if you're buying to close one that you sold on the previous high, right? If you sold like a covered call here and you're buying to close it here, you'd want to wait for the stock to move back up before you sell another one in this range, right? Because, you know, once it moves up, then it can move down again. If you sell one now in this range, your risk of assignment, especially with the end of the week approaching, is kind of high. I wouldn't risk it. I wouldn't risk selling anything under this resistance for Friday. It's not like Elon has a crazy high cost basis in Tesla. Tesla 1K days are over. I mean, just for now, it can recover. I stop not triggering. Hold on. Fuck out. There we go. You think Oracle's stock price dropping more than 20% in the last 6 months jeopardizes the deal with Cerner at all? I mean, it could, but probably not. Very dead. Still. There's the gap down. Okay. Yeah, I mean, this little run might be over. Yeah, I got stopped out too. Well, I got stopped out of all but one of my contracts. What the fuck? It's a market order too. And it's in the money. I don't understand why it's not just filling. It's an active market order and it's not filling. Okay, but it says it's sold. What the fuck? IBKR is being kind of a little bitch today, huh? Okay. Well, apparently they let me sell the same contract twice. I'm alright with that. Solid brokering. Header fee. Fidelity down to 67,000 shares at 6.75%. I didn't sell to open my long contract. You're waiting till sub 100 to buy more GME? I mean, I'm probably not buying any more shares. I have enough. And I just spent a obscene amount of money buying into X and Oxy rig. BTU. I bought a lot of shares of BTU. I have to diversify because the market sucks balls right now. It's not my favorite thing to do, but I'm not selling any GameStop, but I'm sure as shit not buying a lot more. I'll buy calls when the time comes. Does June still look good for Cat, or does further out look better? Uh, how much is IV bumping on earnings? Ooh, nice slip of this resistance. Might get that like 13.99 entry, which is the actual resistance here. Hold on. Don't know why I don't have it marked on this chart. Really need to update the WeBull cap chart so I don't have to keep bouncing back and forth. June IV. Yeah, I mean June IV is still really low. So June's not bad. Although this current downtrend doesn't look very promising. If it slips, it may retest like that under 210 level again. Ooh. The fuck's going on here? Yeah, it's like right at resistance. If that's just a distance here, though. Oh, because I made these on the daily. That's why. $16 now. Oh fuck. What day is earnings again? May 3rd. They fucking shorted it hard into the last earnings too. So, how many days do we have? 1, 2, 3, 5 days. That's something. Tesla alive? No, still dying. I'm out of half of my puts. I have stops on the rest. See if it keeps falling. But I wanted to cover my cost basis. Because they're weeklies, so we didn't go from a lower low to a lower low. That's not how it works. We just never got a high. We never bounced. We're just still moving down. Wyckoff's not dead at all. Although we are falling into the bottom of where we see most of our demand. Hmm. It's one. So we're falling pretty far into what has been our low support. But we have our LPS here at 126.70. So falling below this could mean we re-enter another accumulation period. Realistically, how hard could Tesla drop today? Gamma neutral is at 770, or delta neutral. Gamma neutral was at 920, and it already fell below that. So, I mean, it could turn around now at basically any point, but it'll probably, I could see it dropping to like the 880 resistance. I'm just gonna keep following it with the rest of my calls and just see how low it goes, because why not? You explain the demand zone chart you posted on the announcements last night. Yeah, so I was showing the increase in volume as we fall into this range. Um, if you look at the volume traded by price, which is that kind of like horizontal indicator in the second post, this range around 126 is a extremely high volume zone for GameStop, high buy volume zone for GameStop. So this is the point at which we're most likely to see more buy volumes surge in. Supporting our floor, not only our floor, but possibly also a bounce to the upside. What price do you consider Wyckoff dead? I mean, if we fall below the LPS significantly, I mean, we want to see like a breakdown of like 122. Really, like I would give the LPS like a $5 range on either side. Just because of the volatility, right? So like 131 to 1, yeah, 122. If we fall below this range, I would say that we are re-entering an accumulation period. And this is kind of what we expect from GameStop cycles. So, I mean, a full turnaround and a move into phase E, while it would be nice, is not the standard for GameStop, right? GameStop moves up almost every time you see it. We see it move up from an accumulation period into phase D, and then we see it break down usually almost immediately. So our support this time has been far higher because we've been breaking down very, very slowly, right? Um, but and then re-enter another accumulation period where we see, a low and test and spring up. So actually, if anything, I would say that the probability for us is to drop below and re-enter accumulation. But with short interest so low, I don't think we're gonna see that. I think we might just see our floor at like 126, and we may just start accumulating in this range, and that's part of what I was indicating with that volume profile is the volume is so high in this, the buy interest is so high in this range between like 131 and 120 that it's very likely we can stabilize here. So if we have a floor, if we're gonna find a floor for this cycle, this has a very good chance of being it. We can find a lower one down at like 107, because there's also very high volume in that range. But I think odds are we can stick here. And if we do, if we can confirm some serious volume in this channel, um, this upper one or the lower one down here, we're down to 122. I think we're in a good spot. I think we'll be able to stabilize there. We may see a small dip down into the 110 briefly throughout this cycle, but I think we can stay in this range. Obviously, barring a market crash. Thoughts on if the SPY breaks 420? Didn't it yesterday? I think it hit 419 yesterday. I hope that helps Big Daddy and the other people that are asking. It kind of just means we move back to phase C or B. Realistically, how hard could Tesla drop today? Barry found support. Yeah. You see us ripping past 200 without MOASS, i.e. Wyckoff? Yeah, I mean, if the fundamental value of GameStop goes up, if the NFT marketplace gets released, things like that, like outside catalysts aren't really factored in, right? But an outside catalyst right now would bring a lot of long institutional interest, right? Because of the amount of long pressure that we see on the stock already. So there's already institutional interest in GameStop. And if there's an announcement, there'll be more. And a lot of the reason that we have institutional interest in GameStop on the long side right now is because of the promise of that announcement. So it's speculative, but it would pick up in strength if there was an actual announcement made. Melvin making back all of money back today on that long short. Also check AMD. I already checked AMD. It's super cheap. If phase E takes place, price target, ooh, no idea. Above 177. It should be significantly like above the previous high if it occurs. So it would be above like 200 where we saw our peaks in phase D. Like 50% above that, roughly. Tesla dead. Elon might be selling. You get vastly different results. I mean, you're just talking about like phase C and D. You should see volume peak, drop, peak again on the spring test, and then volume run up big, and then bleed down, and then spike again. Essentially, well, it it kind of bleeds down and then picks starts to pick back up as you enter phase E, and then it moves up massively. I'll try to find you some diagrams. You should look in academic papers if you want to try to find them. There's been so many so many studies on Wyckoff, so you can find some pretty good volume profiles there. Sometimes they're 3D modeled, which are a little harder to read, especially when you're trying to compare them to like 2D volume profiles that you see in your brokerage charts. Puts on DWAC? What's it trading at? Is it even worth buying puts on it? Eh. Nah. Is PiFi still bullish on GME? I went over this yesterday. Yes. You set trailing stops on your remaining Tesla puts. How wide did you set the stop and the limit from the current price once you've already covered your cost basis? I have it at about 5% out. It has not been moving up at all. It's just been going straight down. So right now, if it bounces back to like 210, I'll probably get stopped out. It's no Elliott waves turd. BBY in the demand zone. Ooh. Huh. This is very odd. I like it. Are Tesla puts dead now, or am I chasing? Um, I don't know how confident I'd be in out of the money ones at this point. But if you're like in the money, uh, they're not so bad. Like 920 is probably fairly safe to try to follow the price action. Keep a tight stop, obviously, but um, not necessarily. I mean, the next resistance to the downside on Tesla is at 901, and if it falls below that, it's probably going to drop down here to like the 880 range. Where do we think the floor is for BBBI? I think it's around 16. It's a little lower right now, which is nice. Project Capitalist's aim, GME bankruptcy not likely. What about margin calls and liquidation? Such a huge downward for Tesla. Yeah, I don't think so. Could be a good buy opportunity if you want to get Tesla pre-split if it keeps tanking. If it hits delta neutral, oh boy. Well, we're hoping it's sideways. We're hoping we find a floor. Why didn't BBY run last August like GME did? I mean, it did, just not a lot. This is the August OPEX. Peaked at $30 from a low of 25. And then it ran pretty hard into November as well. And then it's done. I mean, it's followed the same price action as GameStop for, aside from Cohen's buy-in right here. But even here on March 29th, so it's. I don't think. I don't think there's any deviation, but it did run in August, so. Above 200 now gets me jacked the same way above 2000 did 9 months ago. Leverage is a beautiful thing. He's not selling 43 billion worth of shares. He got a loan. Jumping in for 880p weeklies, Tesla YOLO. I mean, those probably won't go in the money though, right? Like that's the next downside resistance. So that's where you'd expect it to bounce. You wouldn't want calls there. I mean, I guess if you're buying them now, they'll make some profits, but selling covered calls in a bear market is the equivalent of buying calls in a bull market, right? Like you're everyone always prints. It's official. 1 year for me today, watching the Pi-Fi stream. I've learned a lot the past year and had a lot of fun hanging out all day. My portfolio is up considerably and making money the Pi-Fi way this year. Thanks, Dangerous Dan. I appreciate it, man. Congrats. $5 puts on Ader. How long till it breaks this support? You have $5 puts? I don't know. It can stabilize here. I still expect the down. Damn it. I don't know. Not long. It just looks like there was FTDs. So it should start to slide back down soon. The only problem with this is like it is like a $3 or $4 stock. So like just like book value. So there's not much range left. If you shorted the peak, then you're killing it. But if you're trying to short now, a little less range on it. When will the SPY return to its long-term upward trend? That's gonna be some time. Could be a year or two. Or 10. Has Wyckoff failed? No, not yet. Is it, wait for it, crime? No. Almost never. A slight bullish divergence on the 1 to 5 minute Tesla charts. Yeah. And I'm gonna get, yeah, I get stopped out here, I think. Nope, not yet. Close. 905.25 probably I'll get stopped out at. Nothing happened to Wyckoff. We expected this resistance. I talked about it in the DD this morning. Here we are, 126.91. Still 20 cents higher than the actual resistance, so. Why does everyone keep spamming Wyckoff? Does Wyckoff face the entries on companies with strong fundamentals, the ultimate form of value investing? No, but it's a popular one. I mean, look at the way Burry targets buy-ins. His Fidelity position looks promising. What forces a stock to go into phase E? A fundamental revaluation. What price would you be content with selling your GME at? No intention of selling it, really. I make far more money selling covered calls on it. Why would I bother selling the stock? I mean, at 100% plus IV for another year, I can reduce my cost basis on GameStop to basically nothing. Toronto was addressing their reason to be bullish about the split, and Yahoo cherry picked bankruptcy not an immediately a concern to spin it to be negative. Standard. I'm pretty sure I'm stopped out of Tesla now. Yeah, I'm out. Are we full Theta gang now? We should be getting there soon. Bear markets, turd. Bear markets. What do you think is causing this SPY downtrend? Inflation, global economic catastrophe, war? Pick one. Thank you, Jonathan Poindexter. You're appreciated too. Super impressive your inability to make money on Tesla. I don't understand his positions on Tesla. He's in Europe, so he's taking like what I assume are CFDs, but they're always super fucking far out of the money. I don't know how, but I'm up 174,000% on my SST. My $7 calls are now worth a total of $16. I have no idea. SPY and IWM are getting really close to low support tipping points for big downsies. Yeah. Daily close under 414 on SPY and daily close under 180. Yeah. Doesn't look good. How's VIX today? Back at 30. Now the time for July calls on GME. I think you could be more patient. Why buy a call now that's not going to print until June? I sold a 132 CSP for Friday. I don't mind getting assigned, but my question is it better to roll forward for a profit or get assigned and sell CCs? It's better to roll forward unless that's the price you want to buy at. Like if we're continuing on a downtrend, why not just roll it forward and make more money? Because you're reducing the cost of your buy-in on based on the premium collected, right? So say you sell a CSP at 132 and you collect a premium of $5, right? You're still deducting this from your cost basis if you're assigned, right? So you'd be buying GameStop stock at 127. But if you roll it forward and now you have like $8 in premium, right? And you get assigned at like 125, now you're buying your shares $8 lower at 117. That makes sense? So if the stock is trending down, you can keep rolling the CSPs forward and collecting premium. And then at the bottom, you just have a fat stack of premium when you finally get assigned. And you're buying the dip. I need to get some like Ricolas or something for my throat. Spend so many hours a day talking. It doesn't look terrible. Might be able to get an entry around 146 again, but it probably bounced off the EMA 30 here. Um, Not too dissimilar to what you see on like X. It's kind of expensive. I do like their lower float. I don't know about their fundamentals. I'd have to look into that myself, but I sold a 132. If you're looking to get into cat calls, would you get the before or right after earnings? Are you confident in earnings? I'm pretty confident in their earnings, yeah. They're like lease structured sales mean that their earnings are usually pretty reliable. I'm not afraid to hold calls through their earnings, I should say. Although my cap position isn't huge right now. It's pretty small. Rad Leap's a good buy right now. I mean, if you want to try to play the buyout, otherwise, probably not. Up 30% on my GME 100 puts. Nice. Is there still FTDs due on BBY today, or did that finish yesterday? That finished yesterday. Picks up 7%, GME down 7%. Jeez. Yeah, and usually we move with the VIX. There's usually a fairly strong correlation with it. Well, we did last year, not so much anymore. 6 day from job to bounce on previous Netflix earnings, likely to play out in this case due to T plus 2 plus 3. I mean, that's what I have calls for. I don't know if it will or not. Target resistance levels drawn to the downside. I already got stopped out of my long position there. Are you looking for like a new entry? Like 135, most likely. Ooh, interesting. Netflix starting to approach, well, not just starting to approach, falling below uh this support here, which is interesting. Or not Netflix, Amazon, sorry. Hmm. When's earnings on this week? Will GME drop under 100? It could. Right now, it doesn't look like it. Easiest way to see accumulation on days like this is when stocks like LYV barely move despite the market tanking. It's been very resilient, which makes me think funds are loading up again, especially if volume's higher. High volume, stagnant price movement is a very good indicator of accumulation. It's just negative beta with extra steps. Sort of, yeah. Except they're probably just gonna stream it on fucking YouTube again. Hestia. Also, who gives a shit? Don't need to see fucking what's his face's face. Wife just asked me why I told her invest during a bear market. Can I sleep on your couch? Or maybe the Dans have a night shift available at Wendy's. What did you tell your wife to buy? I sort of agree with the subscriber drop for Amazon, but Amazon had less exposure to the Russian market than Netflix did. And a lot of Netflix's subscriber loss was from Russia. Does today have hella upside potential? Just fuck yourself. She's got 50K in Amazon, GME, and Sundial. Why is she investing in Sundial? Is a better question. That company's dog shit. It's like the AMD of the pot world, or AMC of the pot world. Worse. To be perfectly clear, you will be streaming during an alleged Volgavada squeeze and an alleged Gamma squeeze And you only leave for an actual short squeeze on GMA? No. I'd probably leave in a Volga Vana squeeze or a Gamma squeeze as well. I have too much to handle to fucking worry about. If that happens, there's no way that I'm fucking doing this. Are my 17 and 18 covered calls for BBY safe for this Friday? I'm scared. For this Friday? Mm, that's going to depend on how. Well, if there's any more news of the Bye Bye Baby buyout, which there hasn't been. But if there is, that could cause volatility. But I think you're probably fine. Did I forget to sell covered calls this week? I feel like I did. Oh, okay. Never mind. We keep the stream up for Pontiffs of VWAP. Sure. So do we expect Jimmy to hit the lower high this week or next? The lower high? It's hard to say. It's been like one day of up and then like 2 to 3 days downward movement for most of this cycle. So I would say tomorrow will either stabilize or move down a little further before we see any upside. And that'll depend on, how much call interest we see build up here on support. I don't know any Farsi phrases. I'm not Persian. I think Amazon can drop a little. I don't know how much it's going to drop, but it'll drop a little. If I get a Pontiff membership, can I play one game of TFT with you? Sure. Yeah, the Rivian investment isn't going to help them this quarter. Made 50% on my CCs for BBY. You know where that money went. CERN puts. Next lower support for X, 30. Since they don't have marrow. Just because their bones are hollow doesn't mean there's no marrow. It's not really so much that they're hollow, it's just that their like internal structure is lighter. Have you never cracked open like a chicken bone? You can see the marrow. It's just on the like inner edge of the bone instead of filling in the center of it. Like if you look at like a oxtail or something, like a beef bone, you'll see that the marrow fills the entire center of the bone. And if you like break a chicken bone apart, you'll see that it only fills the edge. That's on Facebook, Roku, Amazon. Shit, maybe stable. Thanks, Jason. Appreciate it, man. Thoughts on Veru? Today looks spicy. I think today was spicy. It'll probably keep coming up. I don't like that it got defeated over 15. This indicated a lot of selling off, and there was a lot of $15 calls. Now that those are closed, we'll see. It could stabilize in this like $14 range though, until there's more news. I'm out of Veru. I also got out during this, so If I see it drop back to 12, I might consider a re-entry, but that might be about it for Very for now until they get some other approval. If the FDA approval goes through, it can rock it again. It'll probably move hard, actually. If I get Pontiff, can we go to Peter Luger's together, but sit opposite ends of the room at separate tables and not speak to each other? But I get one nod from you after dessert. If you get Pontiff, we can go to Old Homestead and I'll eat dessert with you. But I also won't talk to you. How's that sound? What do you think of Snap triple bottom on daily? It looks good. I think Snap's going to get some value back. I'm in it for a while, so um, I'm willing to wait for the turnaround. Good time to average down, and the triple bottom on the daily is should be bullish. Although we could be facing, a massive market correction. And this does look like accumulation, by the way, of long positions. Um, at least beginning. It's got a wide range, but it's there. See this volume profile that fucking Stefan was going on about? See the volume peaking in. And we want to see his volume peak out of this dip. Looks like Cat found a floor. Yeah, maybe. I don't know. I think it's gonna drop to back to that 110 resistance. Maybe like 112.21. Everything depends on big tech earnings this week. Probably. If they're all shit, it's gonna be a rough ride for the SPY. Snap for June 40. Mm, as long as the market doesn't keep dropping, then might be enough time. Weren't there FTDs due today? There are. They're covering them. You please recommend a proper academic journal whereabouts we can find proper Wyckoff volume profiles? I'm searching and still seeing vastly different volume profiles. Sorry, frustrated. Sorry, can't really help you right now. I can try to find some for you later, but people's interpretations of it are going to be different. That's on Qualcomm. Might turn around a little bit. Not usually the quickest mover, but found It's at a decent support. I mean, I don't hate it. I just feel like this could drag on for a little while before it really sees a bounce. Given that it's basically lost all the value it's gained over the last year. How are they covering FTDs yet GME keeps dropping? It doesn't CNS does not create buy pressure. It creates volatility, which we have volatility, but it's not going to necessarily, like, without outside force to drive the price of the stock up or to put pressure on CNS clearance, you're not going to see price improvement. The only way you'll see price improvement from FTDs is if they are net short and a lot of them. We probably have maybe between ETFs and GameStop, maybe about 800 to 0.2 million FTDs on a day like today. And, you know, we're just going to see that volume traded and netted off. If our FTDs are 700,000 on GME, not on ETFs, plus like 700,000 to 1.5 million, we can see some buy pressure from FTD clearance. But generally speaking, without the market coming up, the sell pressure from active funds is more than enough to clear out the FTDs that they need to cover. So you remember, active funds are selling, which gives CNS net short the necessary volume to clear FTDs. I'm starting to think CNS isn't a very fair market mechanic. I mean, it's very fair for institutions. Was your Tesla print that printed this morning a YOLO, or was it not chasing at the time you bought in? It was a bit chasey. I bought it because it was breaking down through this support level. And it had broken down far enough. There's another support here at like 970 is. And it had broken down below this. And so I knew the next support was down here, at 937. I trade Tesla a lot, so I'm generally fairly aware of its price movements. So it's something I'm always actively tracking, but it's still kind of a YOLO, right? I was buying weekly 925 puts. And I just expected these to gain some extrinsic value as the price fell. I would have considered this to be a solid floor, but it fell below that, right? And so I just kept following the trade after that point. So it's a bit of a YOLO, but it's based on the fact that fairly confident in Tesla's price movements, generally speaking, outside of catalysts, which happen all the time on it. And it's a dangerous stock to trade because of that. But it had enough momentum. It was seeing, we were about here in its drop off. And it was seeing, increased sell volume, which made me pretty confident that that volume was going to continue to increase, at least for a little while, which it did, up until it peaked here. So CNS is one of the 1,000 mechanisms against retail. It's not really against retail. It's just there because nothing that trades is real. in a market where everything is synthetic, the clearance of those synthetics is obviously important, right? And you know, the goal of the SEC and DTCC and NSCC is to create a market that is low volatility and efficient, and CNS is efficient and removes volatility. So it does all the things that they want it to do. Fair for institutions, same, like unfair for retail. Sure. When you read or hear about world events, do you automatically think about related tickers to that event? Sometimes. Paraphrased, the goal of the SEC, NSCC, and DTCC et al. Is to uphold the appearance of a fair market in a fake and synthetic market. No, the market is designed to be fake and synthetic. So it's not to uphold the appearance of a fair market. They don't give a shit about upholding the appearance of a fair market. For some reason, people just believe that a fair market is like a God-given right or something. It's not written into the fucking Constitution. It's a capital market. It's supposed to be efficient. And if that efficiency is to the detriment of the lowest rank of participants, it does not care. That's the misunderstanding, is you think someone's there to protect you or make the market safe and fun, and that is not the case. 'It's like cashier printing money when their till runs out. Rather than waiting for a manager to fetch more, then later in the day they shred what they printed. No, well, sort of. It's like you make a trade and you get two copies, the synthetic share created and like a carbon copy. Remember like the old credit card slips? We had the carbon copy, and CNS puts those together, but not necessarily in the same order because there's no serialization, right? So, you know, it just matches one original copy with one carbon copy and then poof, makes it all disappear. It's perfectly efficient. It's extremely efficient, actually. If you look at the rate of FTD clearance and the number of trades settled through CNS in the market every day, it's extremely efficient. Very good at doing what it does. 140% of a float short sounds pretty unfair to me. I mean, it's allowed. It doesn't last long. Like 140% short interest doesn't exist for an extended period of time. Or like retail can do anything that institutions can do, or institutions can do only what level 5 retail trading offers. We can't do anything that institutions can do. We don't have ISDAs, so we can't utilize swaps to offset positions. Yeah, you're able to participate in it, so choose. But that doesn't mean that that participation is going to be tailored to you. You're the lowest common denominator. Capital markets are, you know, weighed towards those with more money because they have more capital. They built it. Sure, they might have built it on the back of generations of poorer people's money, but they built it all the same. That's like showing up to somebody's house and being like, I don't like the layout of your kitchen, change it. Well, they're probably not going to, right? Yeah, the only time CNS will drive price action is if it becomes overwhelmed. It's not hard to overwhelm it on GameStop because GameStop's so illiquid. Sufficient for what purpose? I thought the market was created to invest in companies you thought had a chance to grow or make more money. Is that not what the purpose is? I mean, that's the purpose for those who are doing that. It's extremely efficient because it offloads the serialization to the brokers. The total efficiency of the system is what it is. You can argue less efficiency because of increased number of middlemen. True. Although CNS kind of eliminates a lot of what would potentially be middlemen by just clearing out the trades instead of having them try to net settle between hundreds of different counterparties all over the place. Jimmy's just floating at support. It's still just locked in at 127. Why do all the shills come in here on the down days? Not even down that much. 6%. Relax. Gensler's only been the job for 53 weeks. Victor was here earlier. He's not happy about Tesla. XRT's short interest is relative to its float size. So ETFs are not the same. ETFs have an unlimited float. And so short interest as a percent of the float is based on the current float of the ETF. So, you know, if 100% of the float was sold short when the float was at 14 million and the float drops to 7 million, then it's now 200% sold short. But it doesn't matter because it has infinite shares. So FTDs on ETFs can always be cleared because there is infinite liquidity. Infinite. Why would BBY sell Bye Bye Baby if it's their only good business? To get rid of their debt. Penis out for Cenis. FINRA has a new liquidity report due 5th of May. Could that have something to do with the redness? It could be a factor. We also just went through SLD deposits. Where the fuck is Velvet Jupiter? Wait, you're right there. Well, CNS is just the settlement system. The market makers still have to make the market. In every in every step of the process, you will find multiple systems in place to reduce volatility. Because without market makers and without CNS, you would have an extremely volatile market, right? Where prices just did crazy shit all day, and nobody would want to invest in that. people want to invest in markets that just do this, or the other way, straight down, or mostly flat. That's why there's so many liquidity provisions, both in ETFs, market makers, the authorized participants of those ETFs. Liquidity is made for by the CFTC, guaranteed by the OCC, provided by the NYSE's DMMs. I mean, and all of that liquidity net settled by CNS in the end. And so, in literally every step from the creation of a synthetic share until its settlement, liquidity is provided and then liquidity is settled off in a manner that reduces volatility. That is the point. It's like Twitter call was canceled, but we'll still get a report on Thursday. Okay. So does CNS wipe out the liability? So whoever created the FTD now doesn't have to buy it back because CNS nets it off. I mean, they do, but they get a cash settle it. SLD deposits are every week or every month. Third Wednesday of every month is when they begin. AMD good entry for long term, 1.5 to 2 years. Yes, can it dip a little lower if the market keeps moving down? Yeah. I think we could see you may be able to get it at 84. It's risky. You might not be able to, but consider maybe like a cost basis average of moving into the position, like enter a percentage of it now and then wait a little bit to see if you could get a better price before buying more. Especially if you're looking to hold 1 to 2 years. Although, depending on earnings, you could be out in a few weeks. How long usually is the time from Wyckoff phase C to the end of distribution? It's not. There's no, I mean, the amount of time it takes depends on the interest in the underlying stock, right? So there is no predetermined time frame because it's price analysis. So however long it takes the price to complete the pattern that's expected from this institutional involvement is however long it takes. Accumulation can take even just like phase C of accumulation, and the move from the spring into phase D is generally faster, right? Because interest is built up. But I mean, accumulation can go on for years and years. And you can have multiple springs that fail. GameStop went through what would be considered a accumulation period of like 3 years before its run in January. Without market makers, we'd have NASDAQ. Yeah. I mean, NASDAQ still has a market maker, and there's still options market makers. There's just no direct market maker on NASDAQ. But the liquidity is provided synthetically on NASDAQ through, an algorithm essentially. It doesn't have DMMs, so there's no internalization, which is interesting. Crypto is a direct market, sure. What are you going on about, Moon? Thank you for 6+ months of entertainment. I've even gained a few wrinkles watching every day. Praise be to RC. Thanks, Randall Daytona. Are you still in CLVR? Any prospects? Supposedly they're merging with some other fucking pot company. We'll see. There's an over short position there, so it's compelling, but who knows the rate of FTD, the rate at which FTDs and settlement will occur when they have to cover their obligations. I'm in it, but it's like a little bit. It's just a scanner play. It was never like something that I was super invested in. Everyone else loved it because it's cheap. But that's not a good reason to buy a stock. Potential market correction continuing. Bad day for BBBY or AMD calls. Yeah, I'd wait for a confirmed turnaround in the overall market before I started buying into long positions. You generally don't buy long positions when everything's tanking. How have I been here for a year? Why not? Is it normal for IV to be less than 100 for a stock like Tesla that's crashing so hard? Yeah, it's not crashing that hard. It's stabilized a little bit, right? It's still dropping, but the sell-off's actually not that rapid. Don't sell all your shares at once. Follow the price action. I don't think a fake squeeze scenario is something anybody has to worry about. That's just super stonk bullshit. Can you find another interesting but not 100% accurate market mechanic so that Stefan can have a new magic bullet to chase? I'm bored. There's so many. AMD 5685 CSPs simultaneously an earnings play for IV premium and good entry if assigned. Probably not bad. So like a bull spread. Is this a good entry for BBBY? It's almost at Ryan Cohen's cost basis, so ask him. Just tweet at him. Like, would you buy BBBY at this price? We haven't broken it. We're just like right at it. Breaking a resistance actually requires that you not only fall below it, but remain below it. You have to trade volume under a resistance. You have to break free of it. Being 10 cents below the fucking resistance is not breaking the resistance. How safe do you feel about those 150 cc's next week of yours? Any chance you're going to have to buy them back? I don't think so. That's why I sold them. I might buy them back because they're up 50% in 2 days. No, dude, you don't get it. I'm only selling at 69 million and catching the knife on the way down with my DRS shares after all the brokers are bankrupt. Good luck, turd. You'll always have sundial. What a GME 180C for October. That's probably not the worst. It's going to lose a lot of theta value before we run, but congrats on a great year, man. Learned a lot from you since day 2. Work sometimes keeps me from watching, but I can always count on some troll triggering you with this stupid argument and get caught up over one of your compelling rants. Thank you, Broken Hand. I appreciate it, dude. Why are you scanning for Wyckoff faces? Here's the problem, Stefan. You have to be in the positions for very long periods of time. So you're buying stock if you're scanning for Wyckoff faces. So limited leverage, which kind of sucks. And then, depending on your price target, what if the like spring tests, don't hit your price target? What if your price target's like here, and then you just bag hold it for another year? This is fine for for long term investors, but shit for trading. What was the idea of buying back at 50% sold options? Sell them again. Yeah, I'm not rolling my CCs down below 140. That seems dumb. Of course, you're glad I asked. More confluence for better entries, but totally different type of analysis. A rounded bottom breakout, which I will say is fairly shit in terms of a breakout signal. Um, and Wyckoff AC are totally different. Like they can occur for totally different reasons. A rounded bottom breakout does not mean Wyckoff AC, and Wyckoff AC, I mean, basically always means a rounded bottom breakout, but not if the volume profiles don't match. Tesla dump with the market, but harder for a real reason. Um, I think isn't Elon selling Tesla for his stake in Twitter? Selling his Tesla off. Would a stock like Cat experience Ivy crush after earnings with Ivy only at 50 to 60%? Yeah, because even at 50 or 60%, it's still like double. It's like Ivy 90. The issue with rounded bottom breakouts is they can break down also, and they frequently do, or nothing, right? Fortunately, been away from the stream and GME over all the last couple of weeks. No worries. What's up, Spinserve? Do you have an educated guess of the best time to enter calls for the split run? Jan 2023 is just what I'm looking at. I'd give it some time. I think we definitely have a few weeks before we see any kind of upside. Uh, I'm looking probably around mid-May to begin a position, or at least before I'll even consider beginning a position. I'd like us to find a bottom first, because if we don't find a bottom here in the LPS where we're resting right now, and we continue to drop, our next resistance is at 107. In which case, we're probably going to continue down back into that like $100 range. Before OPEX. So right now it's a risky entry, right? Because if we don't hold 126, 127, and we continue to slide and you buy calls here, you're going to lose $20 worth of delta value. Not that they won't print later, but you're paying a lot of money. You don't have to. Really wish my cost basis was lower than 170, but I'm unable to buy any more. Do you have more than 100 shares? Because if you do, you can sell covered calls, lower your cost basis. Is selling Twitter calls above 55 free money? Oh no. That's a dangerous game. Don't play it. Tesla long selling off. I mean, they just don't like the risk that presents to their position. Intriguing. I gotta learn how now. Should. CCs don't lower your cost basis. I mean, they do. Sorry I missed the first half of the stream at a training seminar. But I'm here now. MOASS may commence. Thanks. Thanks for joining and being ready for us to go to the moon. Afternoon rally? Not yet. How's the morale? I don't know. I made a bunch of money on Sherwin-Williams and Tesla today. I'm pretty happy. Other people seem to be sad about stuff. Price is down. Shills are breaking out of the Super Stonk Discord and harassing us. The usual. You're selling covered calls on Twitter? Because generally when someone's like aren't sold calls on Twitter at 55 free money, they're not talking about buying 100 shares of Twitter and then selling calls. They're talking about selling naked calls above 55, which is super fucking risky. Wendy's X Waste Management merger coming soon. Where do you think our downside ends today? I mean, it should end somewhere relative to our LPS, the support line, which is not the right place, but it's supposed to be at 126.70, right? Hold on, I gotta check trade. Yeah. Doesn't this just let me set the fucking... There it is. Good time for more BBBY leaps. Near the money? Probably. How's IV, though? BBBY Delta Neutral's coming up, so you're not the only one thinking the same thing. Second, check something. IV is kind of elevated right now. Might want to wait. It's dropping, but it's way up from where it was 2 days ago. Still almost, it's 24% higher. So I would wait for IV to fall off a little bit more. Calls are starting to pick back up, but the put call ratio is about even right now. So it's not a terrible time for leaps. Nope. Pretty close to LPS. Yeah, fibs are always pretty close. That's the problem with them, though, is that they're not precise. A little bit here, a little bit there, and before you know it, you're way off. That's one of the reasons I don't like them. Is there a source that tracks historical IV? You can use bar charts. Some brokerages have it, like TDA. I think Fidelity has an like historical IV. There's a bunch of places to get it. BKKT up. Ooh, nice. It's doing a thing. If it hits 5, I don't think it'll sustain it though. So be wary of that. The call interest is decent though. What does this company do again? Do you cover selling CCs in the school of stock videos? I only have one school of stock video so far. So no. I'm working on putting out a covered call video, and then I'm doing another video for cash secured puts. I'm not a Wendy's chili kind of man. I'm a make my own chili kind of man. Lint liquors. Should I pick up my gourd futures now or wait until the end of May? Ornamental? Netflix going under 200? No. Tesla gonna bounce tomorrow? If it moves up, it'll probably do it overnight. It's stabilizing. This is GameStop. Do you use implied vol on your charts? No. Negative 30 delta, pretty safe. I mean, technically, no. You have I mean, they're safer. You have a higher risk of assignment at 0.3 delta, negative or positive. Safer is considered like 0.2, 0.1. If you want to remove any risk of near-term assignment. These do not have a high probability of going in. 0.4 and 3. Like 3s are fairly safe. Usually you won't get assigned, but you will get assigned occasionally. 0.4 is high risk, right? Like your risk of assignment is fairly high. Of course, if you know, sometimes you want to be assigned, in which case selling 0.4 or 0.45, is good. If you don't want to be assigned, then further down. 0.3 is, it depends on the stability of the underlying stock. If it has high volatility, 0.3 will likely get you assigned a lot. Why is the SPY edging at 420? Either go up or down. Come on already. It's just doing its thing, man. 5-6 weeklies look like a decent scalp. I mean, from this price point, it's not bad. I don't like where BBY is kind of floating right now. However, if we go out here on the daily, there is like this 1550 range that it can fall to and just kind of sit at for a while. So I'm not a big fan of that. But I do like the idea of it bouncing from here. I think this is a good spot. Can it drop down to these like support levels? Maybe. This would require quite a great deal of shorting or more institutional sell-offs for it to fall down to this like 1380 or $13 level. At these prices, I'm just gonna buy a shitload more, like no question. But I don't think it'll see it, frankly. There's already quite a lot of interest in the put call ratio is already turning around here at like 15, 16. Even 17 was driving a lot of interest. So are you going to Monaco Yacht Week in October if we MOASS? No, it takes years to have your yacht completed. Please explain how theta affects contracts. Meaning, does it change with the second, minute, hour, or just daily? Thanks. It's a constant. The rate of decay from theta is constant. So even second, minute, hour, daily, all of them. It is a constant decay. Over the lifetime of the contract. There is a break point in theta around the 45-day mark. Where the rate increases. Are you approved for level 10 options trading? You mean an ISDA? No. What's your go-to fast food choice? I try not to fucking eat fast food if I can avoid it. I really don't like any of it very much. When you talk about volatility, are you talking about historical or implied? I'm talking about its current volatility, or IV30, which is the IV at the money for 30 days. The average of IV at the money for 30 days. Which is IV30. What happens when the derivatives, when a company like Twitter goes private, puts calls in the money, out of the money mainly? Um, I know there's two outcomes to this. One second, let me check something. So, if your options contract is in the money, in the money based on the buyout price, um, you can exercise it, or someone else can exercise it for. So, say you have like a $52 call on Twitter, and the buyout price is 54.20. Um, the value of your option will spike, right? If you have an out of the money call on Twitter, 55, the value of your option contract is going to drop. You'll have time to sell it before the stock's delisted. Also, they're going to close out any open positions on the stock, which can create a lot of volatility in the underlying as it moves into being delisted, if that's what's going to happen with it. So, I mean, you'll have probably opportunities to get out. What about wheat? Moving back up a little bit today, up 1% overnight. Kind of retested that low already, though. Not, I don't know. I'm not really watching wheat on the intraday. I was listening to Houston, and he mentioned Greg had a rant about MOASS not selling all that high during yesterday's stream. Anyone know a timestamp so that I can listen? MOASS not selling all that high? What? I think I clipped it. I don't know if it's out yet. Might be. Let me look. Yeah, it's not out yet. But I clipped it. But if you can't, if you can't, what's your go-to? Um Actually, bastard. The last time I got drunk, I had White Castle. That was disgusting. Um, like really, really super drunk. Probably Wendy's. At least they put fucking lettuce on their burgers. Google and Microsoft have decent earnings. I think that will boost the overall market. It'll help support the overall market. Is the Tesla 20-to-1 split real? Probably. Yesterday on Houston, someone said to him that you said GME cannot reach high levels. Now there is someone here saying that he said that it would not reach it. What? This is already too much drama for me. I don't know what the fuck anybody's talking about. I didn't say GME would not reach high levels. I said that short squeezes are unlikely. For my shares, Tom? Shares of AMD? My cost basis is like fucking $13. I've been banned from a White Castle. What? How do you do that? I've seen people like OD'd in a White Castle before, and everyone left them alone. Gabe Plotkin's trading career is the source material for Elden Ring. He's become tarnished and will soon ascend to claim his rightful throne. Thanks to the hard work. Elden Gurk Re. Thank you, Dan Almighty. Tips on how to play cat options. What's the issue you're having? Chill? I know. Yeah, but like we've already established that. Let's move on. In and out is obviously the best. It's funny the way people translate your words. I know. They just hear what they want to hear, which is generally negativity. I do look like that someone who's curious about what I said is actually willing to watch the source material instead of just believing what they hear out of context. So that's a bonus. Why is a short squeeze unlikely? What do you plan to do with your GME position going forward? I mean, I bought fucking GameStop because I think it's a good company. I didn't buy GameStop because I thought it was going to short squeeze. To be fair, when I bought the majority of my GameStop position, it had already, for all intents and purposes, squeezed. Right? I had GameStop moving into January, and then the vast majority of my position I hold now, besides 500 shares that I originally owned back in November, I bought in February, or bought contracts and exercised those contracts that were bought in February. I've picked up more shares here and there since then, but maybe only about 10% of my shares since Feb. Not even. So I didn't buy GameStop with the realization or the hopes that it would squeeze. I bought it because I thought it was a good company to buy. I still think it is. So I plan to keep my shares. And as long as IV remains at fucking 100%, I will capitalize on the value of those shares in options premium. And I will make money off of the volatility cycles driven by market makers every fucking quarter, like a clock. Unlikely does not mean impossible. And I have shares. So it's like, I'm still long GameStop, whether it squeezes or it doesn't. It doesn't fucking matter. 50 burgers and a puke and rally initiative that have coincided, totally unrelated, with the White Castle having been robbed by some crackheads. Jesus Christ, man. That does not sound. Don't ever eat 50 White Castle burgers. Tips on TFT team layout later. Fidelity says I'm up 1,207 on a covered leap I sold a while back. Would I want to buy it back or roll it? Can you explain why and how? I mean, that depends on how much premium you collected. So your risk is your shares at that strike, right? And then you collect premium, and then whatever percentage of that premium you have collected so far is the reward. So if you feel that you have been rewarded adequately for the risk that you have taken with your shares, then you can buy that call back and sell another one. I don't know why you would sell leap calls on GameStop. That's super fucking risky, but I guess you wanted the premium, big premium up front. Hey, look at us doing a thing. You might want to. I mean, you're profitable on it, which is the long and short of it, right? So Are you profitable enough that you want to pull it back? If you pull it back right now, you will collect $1,200 worth of premium. That will be in your pocket forever. That's your money. If you leave it, the rest of the premium can be realized. So say you sold a contract for, like 30, right? And you've collected 1,200 of that. Then, you still have 1,800 of premium left in the contract that you can let bleed out over time, or you can pay 1,800 to buy back the contract, netting you 1,200 in premium. When you were day trading, what was the average length and time you'd be in a position? 45 minutes at most, usually. Sometimes you get stuck in shit for like an hour or so, but you try to avoid those scenarios. Like sometimes you'll buy into consolidation and it'll just kind of like drag. Like you'll buy into a period of consolidation where it looks like there's a breakout and it'll just kind of do that for a little while before breaking out. And sometimes you can get stuck like just waiting. Can you explain a bit how they built up the obligations and how you see them doing it again for the coming OPEC cycle? I don't see them doing it a lot again, and there's two reasons. One, they didn't clear all their obligations from the previous quarter, um, like XRT, right? And two, the borrow rate is still elevated. Now, it's not above 10% anymore, but it's still relatively high. 1 year later, we realize the call of the pigeon whale ends with a silent P. We're being instructed to recoup our degenerate losses with informed options plays and cycle knowledge. Your stewardship of this cult is exemplary. Thank you, big Brintosaurus. Thank you so much, Maximus Dilymus Meridius, commander of the Pickle Legion. Chances we drop below 126. I don't know. You tell me. So I was 60 cents off from our low for the day. That's not bad, right? The reaction of Twitter's employees at Elon's purchase, the reaction of popcorners and AMC proves to be a false idol. Both. We learned that they can push out OPEX. Some of us in a very hard way. Recoup. So the borrow rate is still, I'm going to go back to this because this is more important. Whoa, what the fuck happened there? So the borrow rate is still elevated, even though it's at like 5.6%, it's still way higher than the 0% they prefer it at, right? Or 0.75 or whatever. So for those two reasons, we're not seeing a aggressive shorting. Arg. So normally during this phase of the cycle, we see large numbers of in the money puts, and we see extremely aggressive share creation and the unloading of those shares, right? Which then, that plus the market maker negative delta hedge gamma squeezes the price of the stock downwards. And these are, in fact, gamma squeezes. And because what they do is they load up on in the money puts,
They borrow a shitload of ETF shares and then they buy tons of out of the money puts, right? And then, the price starts to fall and they start selling those ETF shares and that accelerates the downward price movement, right? I've told you guys before, kind of like the little Hot Wheels things, and the car kind of goes through. That's a car. And then it accelerates out the other side really, really fast. Um, and so they gamma squeeze the price down. Once they get the price down to those levels, they let it trade there, right? Which then crushes IV and prints on their short volatility swaps. Then, when this has reached enough profit, they start to hedge entropy to the upside. That way, they can cover all the obligations they used to create this downturn in the stock without suffering any of the ill effects of the price going up. So that's a brief synopsis of kind of what happens. There's more to it than that, but I think that covers enough. No, I still think that the split is the best possible potential for a GameStop squeeze, Sean. If one can occur, which is a whole nother matter, right? So I'm still bullish as fuck on the split. I'm gonna have an obscene number of shares post split, which I'm also bullish as fuck on, especially if the value of those shares continues to increase. I think GameStop needs to be cheaper, so I fully agree with their decision to split the stock. I think that will draw more retail interest. I think that will allow people with lower numbers of shares to average up. I think it will give people that have, 25 shares, 50 shares, 100 shares, far more shares with which to sell covered calls and generate income in the near term and in down cycles. I do think it can kill the quarterly cycles we see on GameStop because of the high liquidity environment that a split will provide. It will reduce volatility, which means that profiting off of that volatility will be less incentivized. And so these funds that are currently doing this with the price of the stock may not want to continue doing it. Now, if no one sells and volatility remains high, including institutions post split, we can see these cycles continue forever. As long as they remain profitable, they will continue. You just explained people would charge in $500 courses. I don't like stupid. No, none of it's illegal. That's all very much allowed. All of the things that they do that are legal. And almost the perfect laundry of not only short shares but profits, and that you create a buyer within the ETF for the short position. It's very well designed. Got to respect the game. You mean in like 2032 or whatever, 2027?
just listened to what you just said about the split. Because of you, I also understood all of it and it made sense. You rock, Girk. Best YouTube channel ever. Thanks, Carbon Based. I appreciate it, man. Is this a split or a dividend? Not the same thing, which is it's a dividend split, which is an accounting practice. It does leave the short sellers short the dividend, which is problematic for them. I agree. It is our highest potential catalyst for a short squeeze since the share offering in June of last year, without a doubt. But I'm not going to promise MOASS. Because that would be a lie, and I know that's a fact that they have shown multiple times that they can defeat price action on GameStop, and I see paths to which they can create liquidity in ETFs to offset their obligation of the dividend, and to say that it's a guaranteed MOASS, and that it's going to squeeze them out of their short positions, outstanding or packed in derivatives, would be a lie. We know that they will do anything possible to prevent that from happening. And I see ways for them to prevent that from happening. So being dishonest about that can only hurt people. And I think people have been hurt enough by misinformation surrounding GameStop. Aren't holders of the ETF having their value diminished through this obligation creation? Yeah, and holders of the underlying stocks. They absolutely are. It's not going to stop. There could be info we don't know. But what we understand right now makes sense. It works. It's trackable. Um, so that's a good place to be. It is still possible to squeeze due to FTDs in the post split environment, but it has to be within that FTD cycle. So the realization of those FTDs after that period, the likelihood for a squeeze diminishes drastically. Promise me that I can eat ramen. I mean, you can. If I were them, what I would do is after the split is announced, which it hasn't been yet, I would begin covering short positions. At market orders for short positions, driving the price up, right? I would use that increase in price. Well, the increase in price from covering shorts would then increase liquidity in ETFs, right? And so with the increase in ETF liquidity, I would ensure that I had enough borrowable shares in ETFs in order to facilitate the obtaining the dividend cost, right? So I would ensure that enough shares were available in ETFs due to the price increase from covering my short position that I could then use creation to offset the dividend deficit that my short position would face, right? And then once I had ensured that the liquidity in ETFs was high enough,
I would stop covering the underlying, right? I would wait for the split, and then I would use ETF liquidity to offset the split, giving myself T plus 6 plus 35, C plus 3 days, right? And then what I would do is I would then use that time period to bleed off through CNS as many FTDs as feasibly possible. Even if it ran the price of the underlying, right? And then at the end of this, I would attempt to either use total return swaps or cover at market the remaining value of those FTDs. And that's all provided that, you know, a share recall doesn't occur. That way I would affect the underlying price minimally while, you know, offsetting and diluting my covering period to ensure that the price of the underlying asset did not increase beyond a point at which I could stabilize it. It depends. Some ETFs rebalance every day, some do it quarterly. Thanks for cat puts, Burr. Nice, man. We don't have a record date for the split. Would that keep the price under 200? Not necessarily. I mean, to realize a high enough amount of liquidity in the ETFs, they may have to drive the price up quite a lot. But what it would do is create two smaller, less detrimental squeezes, if you will. So say you have, you know, all of this volume to cover. But you can break it up into one big run, net it off in between for, you know, the FTD cycle. And then one smaller run here. If they don't get into entropy, is it boom boom vop? I mean, they're gonna hedge it, right? They're hedge funds. If a recall occurs, they just get fucked. They get bent over and fucked hard. Yeah. T plus 6 plus 35, C plus 3. So let me break that down for the 9 millionth time for new people. Sorry, people who know this. T plus 6, AP ETF settlement, which is actually T plus 5. But it can occur on the following morning. So we say T plus 6 because this covers the window of error in the FTD settlement because it can occur, day of or following morning. Anyway, then Reg T 35 calendar days. Then 2 to 3 days cash settlement ACH period. So this is how long it takes for the ETF to receive the funds before they buy back. You see the amazing rally the SPY had? Man, that was really something. I mean, it looks like it's turning around a little bit. It's a good place for it to turn around, right? I'd have preferred a turnaround up here, like 425, but this isn't the worst if it bounces here. And then in 3 weeks, everyone can show me charts from 2008 again and be like, look, it looks the same. I'm doing all right, Hot Body Joe. Whoa. Hold on. I thought you were average. What's happening here? We may see a recall. I mean, the lenders will be faced with a decision at that point is which presents more risk, a recall or allowing the shorts to continue holding their positions. And based on their own internal risk, they will decide between one of those two. Dude, I'm not telling Kenny anything he doesn't know already. No, they could choose not to recall because a recall presents too much risk for them, right? With regards to your Wyckoff drawing for GME, the downtrend is just arbitrary, educated guess. It can very well continue to downtrend for more days. Oh yeah, I mean I've stated that a bunch of times. Um, this accumulation on Wyckoff, like this, let's call it consolidation, because I mean it is. But this consolidation can keep going. The only time that this phasey breakout is guaranteed, or more likely, is if we see a reversal in this downtrend. So that's why we're watching the lower lows and lower highs and, you know, trying to find a point of reversal. And the most likely point of reversal is going to be initially a higher or even low, right? So if say and the most likely point for that to occur is here at the LPS, right? So if our next low, say we rally right now, which we're doing, say we rally and we hit, 140 or 142. Okay. And then our next low is also 126. That's the first signal of a reversal. Even if our high isn't higher, right? So say we peak, come down and meet the same low, and then, have a lower high. This is consolidation within a tighter range, right? And then that can move up. It's not arbitrary though. I mean, this is all based on the price. I'm still basing the price movement on like 126.70 is a historical resistance. 132.50 is a, historical average resistance. So, educated guess, sure, to a degree. But there is, volume and price data to back up those support levels. Additionally, we're using data from the options chain as well, which is making all of these predictions far more accurate. And I think we've called the high and low of basically the last 6 rallies and dips for within, 50 cents. Is there a probability you would assign to a share recall? That's hard to say because we don't know how overextended the longs are. If the longs are ridiculously overextended, they're not going to fucking recall shares and blow themselves up, right? Because they have those shares in ETFs, remember? So they still have to balance that net asset value. I don't think it'll turn out to be a nothing burger at all. False or done. It will be quite a something burger either way. It's because they own those shares in ETFs. So, if they recall it, then they, as a DTCC participant, are on the line for a share of that risk, right? Or an SCC participant. So if you recall shares and you force a liquidation of a fund, right? And they get forced liquidated out and there's still debt that needs to be covered, that falls onto all of the DTC members. And that debt is split evenly across them, but it still falls to them. Yeah. Uh, tax implications could incentivize a recall. But I mean, if the tax issue, is, say they're taking a 30% hit on taxes, but on a recall they could take, a 50-60% hit on their ETF, they're gonna choose the tax, they're gonna choose the taxes, right? They're gonna go with whatever route is more favorable to them. I.e. daily lows. Yeah. Believe it or not, I might have learned something there. Awesome. Spine at inverse head and shoulders. You think it's likely to bounce back to 450? It could. Likely? I wouldn't say that. It's possible we see a move back to 432. Lowest possible support. Hestia. You don't feel like they will drive it down again like last time to 76? I don't know if they can. We have far more, so we had no long interest when they did that, right? It was just pure short interest, and they gamma squeezed the price down, right? And once they got it into that level, they're able to, manipulate it down and up. I mean, our drops below 100 were very short lived. We didn't spend a lot of time or volume trading in those prices, right? We're still mostly trading above $100. Um, but right now we don't see that kind of interest accruing, and that's because the borrow rate is high. And they haven't cleared all of their ETF obligations, uh, especially in XRT, as we know it's still thresholded. Um, and so we're not seeing them want to further compound those overextended positions. But what we are seeing is an interest in returning shares, right? They want to, and those are hard to come by, but they're trying to return shares and drop the borrow rate. That way they can then like drop the price of the stock. But until they do this, you know, they are part of the buy pressure we see in the lower end of our price action. So, you know, these bounces that we're having, this is partially due to them, right? This is short sellers. It's also long interest, as we see, you know, long interest accrue in the call chain near the bottom. And then, you know, that eventually, you know, helps our move to the upside as, you know, gamma neutral raises up with the increased call interest, and, you know, gives us a positive market maker hedge as we move up. And we're seeing that cycle in basically T+3, right? We're seeing, you know, the upside, and then 2 days of down, and then upside, 2 days of down, upside, 2 days of down. Yesterday they had a little bit of an advantage in that we mostly remained flat. We should have gone up, but we remained flat because the market was also tanking, right? Now on days like this, they have a huge advantage because active funds are selling shares. So instead of, you know, driving the price up like they should have yesterday, we just trade flat because they're able to, you know, buy shares into that sell pressure. Do you think QQQ's performance over the last 10 years is sustainable into the future, or tech will slow down growth? I think it's pretty sustainable, at least in a 5 to 10 year window. I know I've fallen way behind on chat explaining all this shit. All funds are not DTC members. No, they're not, but a lot are. BlackRock is, Vanguard is, right? Citadel is, Melvin is. I mean, the ones we give a shit about. State Street is. Yeah, they can cash settle, or they can pay the dividend forward. That's correct, Ale. Well, a 1 to 10 split would put us at 750,000 or 750 million shares. That seems excessive, given GameStop's current valuation. In the future, I could see them splitting that much, but not right now. I would be surprised if it's more than like 3 to 1. Just based on the valuation of GameStop, I'd be surprised if it's more than 3. They're doing all of this to drop the price, but to what end? They make money on the volatility. Citadel made $7 billion last year off volatility. Not to mention the obscene amounts of arbitrage provided by, Reg T, both through ETFs and on the DMM and market making side. Wait until after to buy in? What makes you think they'll have bad earnings? Thanks, Han. The split is formally announced. Will the record X div date be date prior to the announcement or a future date? It'll be a future date. I think 10 days or something like that. The SEC has rules that outline stock splits. GameStop can do a 3-to-1 split now. What if they do an early sneak attack? That'd be smart. It'd be smart if they had the vote tally and then announced a split before the shareholders meeting. That'd be some crafty shit. I see an advantage to doing that. Not so much for GameStop, but for GameStop shareholders. The Y-coughing can also just be the short sellers trying to get out of their short position before phase E, right? Because remember, phase E squeezes out shorts created in phase A, B, and C, right? So a lot of the sustainability of price action after a confirmed phase D is short sellers attempting to exit their positions before reevaluation takes place. My wife bought me a Powerball ticket. I'll see you at Valhalla. You don't have to take such drastic steps if you don't win the lottery, Popcorn Trader, as to die in battle with your sword and shield in hand. If you can't go on the standard 5-minute candles and accurately describe exactly what decisions were made by every financial institution for every candle on the SPY, you are a confirmed shill. That's fair. There's no other date. It's all or nothing. Either Powerball or I die on my sword. We're forgetting that the stock will rise before the split. So 7-to-1 sounds reasonable if we hit say 300. Yeah, but is that valuation sustainable for a 7-to-1 split? Not necessarily. I think Cat's at the best entry point we'll see before earnings. It's close. I was right about it dropping to 210. Hmm. Yeah, maybe. It might be the cheapest it's going to be before earnings. This chart sucks. It could slip to 10 a little bit. Um, but probably not much. It was 126.70. Yeah, we're fine. We bounced right in that range today. We'll see if we can continue to support upward price action. How disastrous would it be if it squeezes post split? Well, I mean, it'll just squeeze to a lower range, right? It's the same squeeze pre or post split. It doesn't. If they split the split or split it twice, that's really unlikely. That's like a penny stock. I have no idea, Barney. What's your projection for a cat bounce? I think it could go back above like 220, without a doubt. I don't know if it'll break the upper bounds of that channel again, but it could. The market's not in a great place. Do you have rough price targets for squeeze, short squeeze, and MOASS? I mean, sure, right? Like we know what a Volgavana squeeze gets us, roughly. Um, it could squeeze a little higher because people know not to bail out of their calls. Not that that stops them, but they know better. They know about exercising their calls and how that puts pressure on the short sellers. But even with all of that in place, we know like an FTD and Volgavana squeeze aren't going to improve the price much above like 500, right? And then potentially if a gamma squeeze on top of that, if enough people exercise, we could see like maybe close to 1,000, and then MOAS would just be like anything beyond that, right? Like if it just keeps running past 1,000 and keeps just driving up higher and higher, that would be like what MOAS would be, right? Because that would mean that it's become a completely uncontrolled situation, and the shorts are in fact being squeezed out. Derivatives are coming down and being settled. Um, that's who the fuck knows what that would run to. The probability of an event like that happening is super slim, though. We make a quiche like once a week. Are there any extra or unusual ingredients you would throw in to spice it up? Roasted artichoke is nice. Good experiment with various cheeses. You don't have to just do Gruyere. Uh, I put wilted spinach and roasted artichoke in my last one with cave aged cheddar and pecorino romano, some mushrooms. Careful with the mushrooms though. You gotta make sure you get all the water, cook all the water out of them. All of those ingredients. You want the artichoke. You want them pretty dry, otherwise they'll ruin. Won't set. I'd sell CCs on Gmail like you do, but I'm concerned about potential run. I know you said a million times, but could you repeat step by step how to avoid getting assigned if there's a run tomorrow? Well, you can roll your covered call out and up, or just up, right? Um, so if you sell it at 150 and we start moving up, you can move that out further to a 180. So your shares don't, and if we test 150 and come back down, then your shares don't get called away. Or you can buy the contract back. So taking, whatever profits or loss you have on the selling of that contract, and eating them and buying the contract back. You can buy an at the money call to hedge the covered call. So, say we drive up to 140 and you have a 150. So you would buy like a 145C. And then as the price action continues to drive up, the 145C will always be worth more than the 150. So you'll be able to sell the 145 and buy back the 150. So kind of hedging it on the fly. Those are some ways. There's other things you can do. Those are the big ones. Thanks for a great year, Girk. I've learned a ton. Here's to not going another year because this thing pops off. Thank you so much, Chewy Baka. Do you see Veru breaking 15 again? It could. I think a lot of the call interest at 15 got sold off. And then Fluffy Bunny, the worst case scenario would be you can't afford to do any of those things, right? And you simply accept assignment, right? So you sold your cover call at 150. The price moves up to 162 by Friday and closes, and your shares are called away. And this is the worst possible case. So you sell your shares at $150 plus the premium collected, whatever that is. And then, that cash is deposited into your account by the following Monday. And you can then use that money to rebuy your shares now at a higher price. But even in this scenario, as long as the current trading price is less than the premium plus the sale price. So say you sold this contract, at like 540, right? Then your total sale price is actually like 155.40. So your loss would be the difference between the current market price and the price plus premium that you lost your shares at. And that would be your loss for buying back into the long position. Would one lender recalling their shares cause the squeeze if all others chose not to? I mean, it depends on which lender, right? If BlackRock recalls their shares, everyone else is going to just do it also. Best real life job you ever had? I worked for this guy that managed like private equity for a little while, and that was pretty cool. That was probably my favorite job. He was just a cool guy to work for. He taught me a lot, so I liked working with him. And the pay was good and the hours weren't insane. Most jobs in finance you're working at least 10 hours a day. So, yeah, I liked that a lot. And he just had like 20 old people who he managed money for. Old, very rich people, but you know, we'd like go to their fucking houses and talk to them about their investments. It was cool. I think I think that's why I like doing this in a way. Later, glider. Why did I quit? He was moving his location back to the like his office back to the East Coast, and I didn't want to live in Florida, so I've never had a fantasy job. I don't think I work in my fantasies. He didn't scam anybody. He made like 23% returns every year. and he paid out of the fund monthly. So it was a good deal for the few investors he took on. Do you know how far before the meeting they need? They don't give a shit about the vote. They just care about recalling the shares before the ex dividend date, if they care about recalling them at all. The vote's already automatic. Nobody cares about the vote except people on Superstonk who are trying to convince people that you have to DRS. Is the likely top of the squeeze going to be between 300 to 1K? Not necessarily. I mean, it can break out beyond that. You start to get into areas where models can't predict price action anymore, right? All you need is for it to hit 750 and for someone who's short enough to go under to drive the price up even further, right? And as the price action gets more and more volatile, and liquidity dries up, the odds of it driving higher become greater. Were you no, I just worked for the guy. He was a financial advisor. My favorite job is following Pi-Fi stream. Why no like Florida? It's a swamp full of very weird people and giant insects. It's automatically yay if not voted. So and bulls are gonna always vote yay for a stock split, right? No one's gonna like turn the vote down. They're gonna be like, no, we're not doing that. And the executive compensation is minimal, so it's not like that's gonna get turned down either. A very safe option to be buying when you start building a position in May with the potential of no action for months. At the money October calls, out of the money October calls. I won't start buying at the money calls until I confirm a reversal in our price trend. Yeah, giant fucking spiders. It's just not a place for me. This head and shoulder only formed one shoulder. I mean, it tried to form another one, but there was no buy pressure. I'm gonna buy some. I'm gonna buy some further out of the money calls this time. That was my biggest regret from March OPEX, is that I'd narrowed down the risk in my position, because like post February, before we understood what they did with the obligations, like after Feb OPEX just was nothing, right? We had that brief run into Feb OPEX, and then Feb OPEX hit. They changed the rules, and we dropped like a rock. Like the confidence in the position was at a minimum, right? And so I reduced the range of my calls to, like 100 to like 130, right? And then, I'd picked up some like 90s and 95s, like when we were really, really low. And so I didn't really, by the time we hit like 130, all my calls were in the money. Um, and so I didn't have like calls to the upside, which are generally like the big money makers. And I had to take cash to exercise uh, these, which sucked. So I had 120s, 110s, but I would have preferred to have had some like 200s or 250s, but it just didn't look like anything was gonna happen for a little bit there until we started to see the obligations getting bled off into March. So there was definitely like a period of low confidence in which I pulled back my risk, and I don't think I'll do that again. Or I'm gonna position it a bit differently this time. Instead of having such a wide spread, I'll have like a closer, tighter risk at the money spread like last time, but with a nice block of farther out of the money calls for that sweet, sweet IV print. Thankfully, I still made a lot of money on that like peak volatility that we had, because we kept bouncing up and down. Looking at GME calls versus BBY calls June expiry, do you think BBY will be able to run first on baby news, then hop to GME after for max gains? I mean, you hope so, but historically, BBY and GameStop run at the same time, so risky. It might miss. We could see sub 400. Not a good range for the SPY to close in, though. I already lost all the money I made from the run. Well, I assume you either didn't make too much, or you've made some very bad decisions since. Well, I mean, we're still looking for the compounding obligations. They're building them. It's just very, very slow, right? I'd almost rather we see a drop to 100 or sub 100, because then we know they're pushing. Are you looking to average down your BBY stock? I mean, I have within reason. I'm down to almost like $17 a share right now. A couple more weeks of cover calls, and I'll be sub 15. Who's just buying back cover calls? Would you base the trailing stop limit on the ask, bid, or last? Also, is 0.05 trail a good cushion? 0.05 is awfully fucking tight. That's a, that's a, I mean, like any reversal in price action is going to pull back your covered calls. I would say, at, depending on the premium collected, but I would have a little more room than that, and I would base it on the the bid if I wanted to get a guaranteed fill. Although, you know, you'll have some slippage there, but GME gapping sideways. What's your prediction for GME peak this week? Gamma neutral? I mean, if we get a run up. With the overall market conditions, we may not see a lot of long support at this level. Longs are pulling back money right now, and GameStop's speculative. So if we don't see, you know, improved call interest on this low at, you know, where we're trading at right now, and a buildup of those options positions and stock positions that would drive us upward, then I would say that we'll stagnate at best. Twitter below 50? Cool. Yeah, I think Facebook could slip a little more. Not much more, but a little bit more. Don't forget, Facebook still has $50 billion in cash on hand. A lot of people forget that about the FANG stocks. They're cash rich, extremely. So Netflix at 200, regardless of anything else, they could become 15 other fucking companies tomorrow. Um, you know, it's they're not going out of business because they lost 50 billion in valuation. Oh, Ford? I don't know. Who gives a shit? Why are people tracking Ford? Of course it could. The market's coming down. Ford already trading in that low range, though. I mean, it looks like it's bouncing today, but it's already broken through its long-term trend. And it's chopping down to this like 1458 resistance. So yeah, if the market continues to break down, it could slide down to like 14. I didn't really analyze anything below that, but I think there's one support here at like 1250. It absolutely could keep coming down. I know Ford has a lot of debt, which is kind of a problem with the rising interest rates. The cost to service that debt is probably very expensive, even though I think some of it is offset by the government. Is it sub 126? It's a break down from this resistance point. So if we're, you know, if 127 is our resistance, 120, I'll do it precisely. 126.70 is the resistance we're looking at. The price trading below and above it is not a break of the resistance. The price breaking below to it below it, the next resistance down is a break. And the next resistance is at like 122. So if we fall below 122, it's a problem. But you know, just chopping around 126.70 is not a breakdown of the resistance. It was like those fucking people who stopped in here earlier and they're like, ah, we're at 126.30. That's it. It's dead. No. 30 cents below resistance is not confirmation that the cycle is dead, especially on, you know, 1.1 million volume all day. Are long dated high delta puts on the VIX a good play? They can be. Is it worth it? Because a lot of the price move back down is probably already priced into the premium. I don't really know anything about Juggalo culture. Do you expect to stagnate, consolidate down all the way into May OPEX week or the week after? I think we may see some relieving of positions as we approach May OPEX. So, second week of May, I think we might see some upside. Hopefully enough to start reversing our trend. But it may be short lived. You know, they might try to, it's almost like blowing off a little extra pressure, which is what I think we saw back here during the Feb OPEX period. Was, you know, they covered a little bit in order to roll forward those obligations and really slam us before the March run. Because if they hadn't done this, right, and we just run, we would have been running from a pretty high. We would have started our run up here, right, instead of down here. Oh, sorry, I don't have it open. My bad. I see it. Yep. So I think we may see a little repeat of that, and as we move into May OPEX. So I'll probably be buying some, like, you know, monthlies around that time. I might pick up like a few Junes just to see what happens. Um, but I think maybe we'll trade down for like the next 3 weeks, right? Continuing this descent, and then we'll see a little pressure relieved, and that'll put us up, you know, maybe back into the 158 range. And then if they repeat the strategy they used last time and roll forward those OPEX obligations and continue to compound them, and then I think we'll see a hard dip before we move up. I mean, this is obviously not in line with Wyckoff, but you know, this is just pure stock manipulation, right? So it'd just be the dragging out of Wyckoff. If not, if May obligations are just basically irrelevant and the only obligations we're going to be considering are June, then, you know, we may just stabilize in this range where we're trading at now. You know, we may just stabilize and trade flat if there's no excessive short interest, and then, you know, begin to move up as we approach June OPEX or quad witching. Anyway, our day-to-day price action will tell us more about which eventuality will be more likely, at least. Right now, both are possible. Interesting. June 17th, the next, yeah, it's the next XRT S&P rebalance. So June 6th, start to possibly buy GME calls. Or not necessarily June 6th. Like I said, there could be like a small run going into May OPEX. How do you choose what chat you post into? What do you mean you've been telling me that all? That's what I've been saying too. I thought we were on the same page. Were you disagreeing with something? I still want to see them build an actual short position, which they're not currently doing. Launch May 5th. Based on what? Ryan Cohen saying hola on Twitter? Yeah, those fucking predictions have come true. Literally never. About $100 AMD August contract. It was trading around 95. I now have a lot of time. I know I have a lot of time, but I'm down around 40%. Would you hold or get out and wait for a rebound before re-entering? I would just probably hold. I have $100 calls for July. I'm not fucking selling them. They're down. I think I bought a little lower than you, but I mean, they're not down 40%, but I would still hold them if they were. Oh, don't you dare start the Bastille Day again, shit again, J Fresh. Sherman Williams having a good day. I'm so glad I bought those calls last night. Did you keep averaging down on BBBY? I don't know how much more capital I want to allocate to my position there. I have some money set aside for options, um, which I've been buying slowly through this kind of dip. Um, but I think I have like the stock position that I want to buy there. Bonds, same like hedge against recession, supposedly. I keep Sherman Williams in business through my extensive paint chip diet. I have 16K on my car, but it's worth 30. Should I sell it and lease the same vehicle for 3 years, which would be the difference? It would save me $400 a month. Probably. Net $14,000 up front. Yeah, I mean, the value there goes even beyond that, right? Like, because you can, you have that capital under your control, that $14,000 extra. Even if you are chipping away at it, like $400 a month. Because then you could do something with that, like $14,000, right? Like, it's not just stagnant. So you could like, uh, not a lot of safe things to invest in, but say you put 14K in a REIT, right, with like 10% returns. You're getting money on that money plus any value in the underlying. I mean, you're probably not gonna get like 10% a month out of 14K, but you get 10% a year, which is a bunch of free car payments. And that would save you even more money, right? So like say you put it in like a 10% yield rate, right? And you're getting 2 point, or well, you're getting 10% over the year for 3 years. So it's 1,400. 28 years, right? So $4,200 off of that $400 a month. So instead of your lease costing 14,400 over 3 years, you've reduced the price of that down to 10,200. REIT, REIT. The Real Estate Investment Trust. It's not that much higher taxes. It's not much higher. It's relatively the same. In your tax bracket, it's higher, but most people's no. I started with 10K. I've been making 10% a week selling CSPs for BBBY. Yeah, that's more actively managed. But I'm just saying, like, at a minimum, you could do that. It's 14,000, Dork. Not 1,400. I don't think you need to declare your CERN puts if you're going through customs in Europe, Popcorn Trader. It's a depreciating asset, though. But yeah, there's a lot of flaws in all of it. Also, he can just continue a lease, right? You just start a new lease on a new vehicle. And he wouldn't have nothing. He would have $14,000 in cash, potentially. Well, that's if he's able to compound it over 3 years, right? And just leave it and let it sit, reinvest the proceeds. Are better VIX or UVXY leaps expecting a bear market? Probably UVXY if it's going to be a serious bear market. What's the deal with Very? Did I make a mistake chasing? Possibly. I don't know. I think it's stabilizing at its new price point. How high did you chase? If you bought it up here, it could be a little while before it comes back. I mean, a more actively managed investment could yield even better than a REIT, right? You could put $14,000 into like BBBY at 16, right? Just as an example. Should get you about 800 shares, and you can sell 8 covered calls a week at a premium of like 0.5 relatively safely if you're actively managing it. That's the lease payment every week. Even after taxes, you're still profitable. So you have a free car. I mean, I don't know. There's a lot of ways to do it. This is one of the reasons I don't like investing into things, buying shit, because you can just make money work for you. Wendy's dumpster by my work was Danless. Which Dan do I talk to fix this egregious offense? Oh, there's certain franchise owners that they don't like to work with. So, check with your local Dan union and they'll inform you on the best locations for participant franchisees. Yeah, if you just want premium and you don't want to buy shares, you usually want to be, depending on the volatility of the underlying, you generally want to be further out of the money. So you want to look at like point 0.2, point 0.1, because those have very little risk. And then, if you understand the technical analysis behind it, you can take more risk based on your analysis of what the stock is going to do during the time frame that you're selling those calls on. So, if a stock is locked in like an uptrend that looks like it's going to carry on for some time, you can sell CSPs here in the money for a hefty premium for this expiration, knowing that the price of the stock is going to increase, and so you'd be selling like a 0.45, right? But it'd be realizing, at the end of its life cycle, it could be like a 0.1 or 0.05. Like on GameStop, when I'm selling cover calls on the peaks, I'm selling them, like at the money because I expect the price of the stock to then turn around and drop. And so by the time the price, hits the bottom and starts to level out, these 0.5 calls are now, like 0.1. Although I'm being a little safer with that. I'm selling like 0.3s at the peak, which are becoming, 0.01s. You give me a feel on Docu. I mean, it's a tech stock. It's doing shitty like everything else. It kind of rallied a little bit yesterday, over the last few days, but it looks like it's starting to head back to its low. We'll see if it bounces here on the overnight low from the day before yesterday. Um, it could. If it does, you're looking at a move back up to 90. You really want to see like a move back above 94, 95 historically, for that retest of that like 102, 103. Because I think 90 is a little bit of a risky entry. Like 93, I'd be more confident in that the rest of that move. That's why I didn't buy any yesterday when it was kind of rallying a little bit. Do you think the SPY is going to fall below that 418-ish support? I mean, it could. It's not trading a ton of volume in that range right now. And Tesla came down pretty hard today, which wasn't helping it. Your calls can't be assigned in after hours. The options market's closed. Volume's ready to tail off of the SPY, accumulating the downside going into the Microsoft Google things this afternoon. Makes me pretty nervous for how markets react regardless of earnings results. I agree. I think there's more downside to this move. I mean, that's why I've been moving so much money into commodities and oil and value, like high, strong value stocks. Like, I mean, I've been buying up fucking Coal and Kroger's and shit for weeks now, so I'm in anticipation of something like this. Did you ever attain a cost basis of 0 by never getting assigned on CCs? Yeah, I've done it on Palantir. It feels super great. Although many of those calls I sold fully with the intention of being assigned, and it never happened. Yeah, no problem, Zach. I sold BYCCs of the Delta point two, so I guess they're mostly safe. Yeah, they're fairly safe, barring like any kind of announcement or something like that. Nothing's probably going to happen to them. Speaking of CCs on BBBY, I hate to sell them from this low, but I should sell some this week. On these shares, fucking, it's like so little. Cool. That's fair. You know what? I think I could sell it a little later today for retest 17, 16. I just feel like we're gonna trade flat, selling them at all. I sold a bunch on the baby announcement run up at like 25, and those expire next week, but I didn't sell them on this, which is shitty. Did I have, maybe I had open ones on this, that's why I didn't sell them. Next decent support for a cat is like down at 200. 202 if it keeps dropping.
Medical device companies super risky to invest in. Yeah, generally. Medical device, biotech, and like pharma because of the approval processes, which medical device companies are a little safer because their approval process is not very stringent. Anybody getting a device should always investigate thoroughly the device that's being implanted in them. Uh, because yeah, the rules surrounding medical device approval are pretty lax. Sen's still a good play. It's already been approved. Yeah, but I mean, it's like a long-term play. Ballpark number of hate watchers you think watch? Not even 1K likes. I have no idea. Is rig an earnings play? No. It's just a oil play that's kind of cheap and interesting. My big oil play is Oxy. You share your opinion on GME leaps, specifically Jan 2024. It's a long window. I mean, you'll probably end up selling them long before you ever hit it. But why buy so far out if that's the case? Like, why pay all that extra premium when the value that you want to realize will be realized probably in January 23 leaps? Like, if you intend to exercise them in the future, maybe they're worth it. But otherwise, I don't see any reason to buy that much time. Oxy over Zom? Yeah. I have Oxy and Halliburton are like my two big oil plays. I have some rig, like I don't know, 50 contracts, but they're dirt cheap, so I just don't care. That's more like fun. If oil spikes, it will too a little bit. BBBY, same like AMC. I mean, far better value investment. AMC, no appreciable assets, shit cash flow, terrible revenue, massive debt, huge float. BBBY, small float, very good revenue, tons of assets, massive debt. So also, insiders aren't actively selling out of all their positions at BBBY. I smell a lot of fear, and Buffett told me to buy the fear, so I bought. I think it's what you buy that matters.
forgot to say Sen has 0 debt. Interesting. How far out does earnings impact IV? Usually about 30 days. And it starts to fall off. I mean, the impact isn't fixed, right? It's, you know, a relative increase in the IV 30 causes, you know, a relative increase in the IV 90 and a relative increase in, you know, like the 180, so on. So, you know, obviously nearer term options will experience the most and farther dated options the least. It has a diminishing effect the further out you go. But I mean, you'll still see like leaps bump like 1 or 2%, you know, for like a 20% change on the IV 30. And then that's extrapolated across like the IV smile, right? So far out of the money calls experience the greatest shift, or far out of the money contracts experience the greatest change in IV. You're not ignored by Polar Bear. I'm reading the shit you say. I discussed that earlier, Stefan. Like, at great length. Thanks, Jedward. BBY doesn't own a single gold mine. Neither does Highcroft Mining. AMC like IQ test? No. I think more a comment on the lack of financial education present in the US educational system, or a misunderstanding of the finer details of the economy that drives our society. Either way. I'm sorry to hear that, man. If you go back, there's like a period of the stream, Stefan, where I go into all of that share recall business in depth. Just rewind till you see me writing on the screen a bunch. I'm sorry to hear about your cat, dude. You clip it, Joey. I'd trek across the Arctic Circle, dork. So people could discover my body hundreds of years later. If someone gets a timestamp, can you put it in the clips channel on the Discord so I can get it clipped? Because I forgot to clip that. That's definitely something I don't want to dive into for 2 hours again. How high do you think VIX can go on this drop? I'm depending on it to save me from Weekly's folly from yesterday. I mean, that depends on how sustained the drop is, right? If it continues to drop or starts to pick up volume, right now it's consolidating. So we're not going to see a big spike in the VIX because the market has fairly low volume. If we see a big spike in volume in the market to the downside, volume with price coming down, we will see VIX go up. We don't want to see this. VIX is already approaching a dangerous level. But the VIX stayed fairly stable last time from like 35, 38. It didn't bump too much above that. We actually see a little less volatility on this dip than we did the last one. Nut X is up 150%. Oh, that's crazy. That shit's really moving. What happened there? It was like a fucking short squeeze or something. Who's all this? Fuck you, Seeking Alpha. No news, according to Dow Jones News. Huh. Oh well. I'm not gonna chase it. Okay. 14 million float. $7 billion valuation. Oh, that's a short squeeze. Yeah, this company that makes $4 million a year is not worth, $7 billion. So fun, but it could end at any time. I don't know. I'm not going to chase it. Merger with Cliningents Holdings at the beginning of April is the reason for the wackiness. Yeah, but I mean, it's priced way above its merger price, right? So it must just be like massively over short. It's got a $7 billion valuation right now, and they make $4 million a year. No options. The best way to get fucked over. I like leaps on commodities. I do research into the ones you're interested in. Veil's solid. BHP is not bad either. Try to find, obviously you're trying to find some cheaper value if you can. If something's lagging a little bit behind the rest of the sector, there can be some opportunity there. I mean, Netflix could bounce, but the things they're saying are not helping them. Like, we're going to add ads and stop. The stopping of the sharing of accounts is important to their business model. So I understand that. And that's actually bullish, whether people who use shared accounts think so or not. But the the ads on the lower end of the subscriber tier and canceling shows, none of that's good. Don't give a shit, JC. Stop shilling your pronunciations. Is Apple a commodity? Only for the indoctrinated. CLF's a little overvalued. I don't like it. Why isn't ad revenue good? It could discourage new customers from joining. It hurt Hulu when they added it. Or when they started adding it on paid accounts. I still fucking hate Hulu because of that. I mean, I have a ad-free account on Hulu, but I don't like that I do. Also, their app sucks, but that's neither here nor there. You legally changed your name to Giuseppe. Why would I do that? I like Gherk. I'm carrying on a long line of my forefathers' names. Thoughts for CLVR. Backholding shares. They're merging. So, I mean, you're already backholding them. Why take the loss? Try to average down. They still have an overshort position. I've had Netflix for years. If they ever added ads to my paid subscription, I'd be canceling that day. I think they're going to offer a lower... If they're smart, what they'll do is they'll offer a cheaper tier. With ads. So those who are, already in are unaffected. But those who want to save some money every month can shift down their membership. Like, say it's like, or $7.99, something like that. And new consumers will, after, they've been kicked off of their shared accounts, can buy in to a Netflix account for cheaper. That would be the smart way to do it. I don't think that's the way Netflix is handling it. Netflix historically has terrible customer relations, and they do not, I don't think, ever have a good grasp of what their customers want. They've spent so many years putting interest into subscriber growth and not retention that many people just sign up for like a month, watch the shows they want to watch, and then leave. I don't want to buy ads anywhere. I don't want to advertise this. You know how crazy this place would get? Pepe the cannoli whisperer. Can someone make me a Pepe holding a cannoli? Because that'd be funny as hell. See, that's a stupid way of doing it. I know how they'll probably do it, but that's not smart. I like our rate of growth of -2 subscribers a day. It means I'm doing my job. I think we're more in a stagnant market. I don't think anything's crashing just yet. It could. Obviously, a stagnant market carries much higher risk to the downside, but they'll start doing a pay per ad skipped where there'll be a huge surge in pricing based on how invested you are in a show. I did unsub recently because I'm too poor and also just kind of waiting for the split dividend. Oh, I don't care about that. You've been here forever, Pablo. You're cool, man. Don't worry. I now have 200 BBBY shares that I try selling CCs on. Thanks for all your knowledge. Awesome, man. Congrats. In my opinion, these sons of bitches would rather crash the economy than close their overly short positions. They're short everything. Of course they want to crash the fucking economy. Too many subscribers means lower quality watching experience for us. Fefenefe? Oh, I'm calling him that from now on. If you had an ad pop up and it was 5 cents to skip it, you'd skip it. No, I'd pirate movies. When you start accepting EBT, I'll subscribe to be a pigeon whale. I've been going back and forth on BBY CSPs or CCs. I didn't know which way to go. I'm scared to do CCs because of Bye Bye Baby, and scared to sell a CSP with the market dying. You should, if you're long a company, you should never be afraid to sell cash secured puts, right? Like if you want more shares of a company, because I mean, you can always average down a cost basis, right? And then if you get assigned on CCs, like your only risk is the upside. You can always buy back in. I mean, CCs and CSPs are relatively risk averse. The losses sustained are, you know, more profits missed out on than they are actual losses. The only thing keeping you from doing either or making you afraid of them is greed. Greed is what breeds fear in covered call positions or secured contracts. Because you always think you can get it for cheaper or sell it for more. 6'3" Prometheus Dan Pal. Thank you so much. Beautiful picture of J Pal. Um, Bull. Nice. What's up with DWAC? I have no idea. Which coffee grinder? I have two. OKE calls? Why? I don't think Russian natural gas exports have that. I mean, you want to look at natural gas exporters. I don't think they're supplying anyone in Europe. Like, it can have some effect on US prices, but for the most part, it's not going to affect us much. So the stocks that'll really see a benefit are ones with, uh, either natural gas processing sites in Europe or Asia, and then ones that export natural gas internationally. Like, natural gas companies that only exist within the US aren't going to see as good of returns. They'll see some because there's a ripple effect, but did Tesla finally hit where I said it would? It did. It went down to 182. Fuck, I should have held my puts longer. Yeah, it's probably going to recover a little bit. It already consolidated, and this is a fairly strong shift in trend. It needs to pick up some steam, but I would say if it breaks 9, it's going to move up pretty hard. GameStop moving back up above VWAP too. And was I right about BBBY doing the same? I was. Ooh, I can sell my cover calls for more now. Did you say Ripple? No. What about Ripple? I'm gonna buy some. Predictions for Google earnings. Slight miss. Probably not that bad though. I would say no worse than Snapchat. I could use the decline in YouTube ad revenue over the last month to make a prediction. YouTube ad revenue is down about 8%, so 0.8% miss on Google. That's my call. I'm making it now. Based purely on nothing. Hey Greg, I stream your channel every day. I want to support the channel. Can you give a little infomercial on the difference between Long Johnson and Dillionaire support levels? Oh, Dillionaire offers access to the private like trading Discord. So if trading or becoming a trader is something you're interested in, it gives you access to like a smaller community within our community that, is more focused on trading and a little less focused on just GameStop. Long Johnson has access to the members only stream, which is, a good place to go if you need questions directly answered. Even though I try to get to everyone's questions throughout the week, sometimes people have more specific questions to their specific scenarios and stuff, and I try to handle those in like the members only stream on Sunday. So a few hours of just going over, other people's positions and portfolios and talking about stocks that we're looking at for the week or other trends we're following. So um, that's the biggest difference between the two. People that have joined Billionaires seem to like it. But I mean, I talk about a lot of shit on stream. Support is never necessary. How do you bring yourself to hold shares in a company that you don't believe in? I don't know. I mean, I even still believe in Palantir a little bit against all data and potential prospects. What CCs are you selling on BBBY? I'm not going to tell you. You're not front-running me. Fuck you. Oh, fuck you, Moonrun. All right. Push me, Moon, and I'll start publishing incorrect gamma neutral information to fuck your covered calls. Don't think I won't do it. I stopped making predictions because some guy was stealing them. I'd do so much more to fuck you over. It'd be way more fun. C-Mill, for the 1000th time, if you want to buy my covered calls and the Craigslist ad or Facebook ads are still up, they're still available. I mean, arguably, people that are billionaires are $25 poorer. But no, they're not poors. Look at my BB Boy average down by. Almost seems like I knew what I was doing. Congratulations. Joke's on you. I have no idea what gamma neutral is. Jesus Christ. Sells $50,000 worth of covered calls. Doesn't know what gamma neutral is. Classic Moonwind. I made enough in CCs for decades of Dillionaire. Thank you, man. I mean, I'm not saying that you guys haven't offset the cost of becoming Dillionaires, but I'm also not going to say becoming a Dillionaire will make you money, because for some, the opposite has been true. Dillionaire is just like what you make of it, right? If you're going in there like Stefan, full of childlike vigor, you know, it's gonna. Oh, thank you guys so much. I appreciate it. Vegas Fritz and Daku. If you guys hit me up on the Discord after the stream, I'll get you added to the country club or send you the instructions. It's a Tillionaire Hulu into everything. I'm gonna play it twice. I'll play the other song the second time though. I'm gonna play the OG one if I can. Marketing. Last post, March 11th.
Hey dude, welcome to the Dillionaires.
DWAC Dad. Someone called out puts on it earlier. Good call, person. Who did that? Han, you guys should change that copy pasta to the pinned announcements. Otherwise, people are just gonna be scrolling up through endless daily DD posts and fucking red hot memes. Not that that's bad for them, but why is it useful to buy so many options at different strikes to capture every possible move? Sort of, yeah. By having a nice broad range, you can reduce the risk in the position. Because you're able to cover the entirety of the price action. Dan Digadome, thank you so much for becoming a Dillionaire, man. Also, DM me over on the Discord and get you added.
Yeah.
Or if you guys want to get into Dillionaires sooner, you can check out the announcements channel, and the instructions are pinned to that channel. I should have sold my CCs there. Son of a bitch, I forgot. Well, it's because the market makers are pricing something in. Right, Papa Muff? IV is the ultimate tell-all. If you can follow it, it's hard because it's delayed, generally. But if you're watching your IV on your contracts, it's a big indicator of what's happening. Market makers will start pricing in moves before they happen, almost always. It's supposed to be 8 months, but happy 366th day, Girk. Thank you so much, the Mighty Potato. I appreciate it. And I appreciate you becoming a Dillionaire Potato as of yesterday. After your brief bout with the pores. They don't know how to treat a potato, so I understand. What are you personally looking for before entering more GME long calls? I'm waiting for macro fears to settle. Yeah. Are you eyeballing any cycles or more looking at IV to settle further? What indicators are you eyeballing? Well, I'm waiting to see if they compound positions, because if they don't, I don't expect that much of a move. I'm also waiting for macroeconomic trends to calm down a little bit. And I'm waiting for the price to be lower. While I have confidence in the Wyckoff model, I do think we can drop to 107. It's there, and never have we had a low that we could drop to that we haven't hit. So, if we start to see a turnaround, I'll simply buy them. I'm not really in a rush. Everybody's afraid of not having enough exposure, and I really don't feel that way. I feel I would say, very confident in how I want to handle this next OPEC cycle. And patience is definitely key. There's an interesting comment about MMs adjusting IV to price a move. On Thursday at around 3, I looked at BBY weeklies. On WeBull, they were priced at like 1.3. On my other broker, 0.2. Thoughts? Different brokers price their options differently. If you're ever buying into a large options position, you should always check your contracts against Black-Scholes. And because your order will bypass your broker essentially, you'll still get a fill even if it's nowhere near the bid ask that your broker's asking. And I've had that happen a few times where the contract value is actually like 2.6, and the broker was showing mid at like 2.8. It's usually not far off, but there's a little adjustment done there as each broker calculates their Black-Scholes differently. And so something to watch out for if you're entering a large position and there's a big risk of slippage, because that could affect your fill at the end as well, right? I want to get Google puts, but they're pricey. Yeah, they are. See it going down in a bull or a bear market. Bull, get shares cheaper before the split. Bear, offload with some ER plausible deniability. That reminds me, I need to hedge my Amazon and Google CSPs. Should I hedge them 2-to-1? Fuck, those are expensive. Jesus Christ. Shit. That happens too, Jeff. One of the reasons I like WeBull and IBKR better for trading options than a lot of other brokerages is that their options data updates faster. Fidelity, I've frequently run into options pricing lag, and it's an issue. Not that I use Fidelity much for trading options for a number of other reasons besides that. Yeah, the update in data is the speed at which the data updates is important. When does that simply short Google? I mean, I'm not. That would be fucking stupid. But I do have cash secured puts on both Google and Amazon that I had to hedge just for tonight. I mean, Webull's kind of janky too. They all are. There's very few like UI software side focused brokerages. I would say Webull's the closest one because it's mostly a software company and not really a brokerage. I will say their updates are very frequent. There's things I like about Webull. I have multiple Webull accounts. I mean, this is my other. I have 2 Webull accounts, and then I have 3 IBKR accounts. Yeah. Is that the real reason Fidelity offers price improvement? Yeah, I think so. Yeah, if you know what's coming. It matters. It matters to see those shifts in the market maker pricing because it's indicative of I mean there's more to it than that, right? That's because options interest is picked up and the market makers are pricing in that interest. Um, but seeing that in real time is very, very valuable. Like if you see a 10% spike in IV on a contract and nothing's happening with the price of the underlying, something's going to happen to the price of the underlying very, very soon. Yeah, that's what I like about it. It's very streamlined, it's quick and simple. There's issues I have with it, like it'll remember your previous order, which is fucking annoying as hell, instead of just resetting from a baseline every time. So you have to really pay attention, make sure you're not like buying puts or something just because you were looking at them. I think I did that on stream one day. I bought like puts on AMD and they printed, but I meant to buy calls. I remember you seeing this when we ran from 160 to 180 or so on the last run. Yeah, the market makers priced it in like they priced in like a 5 or 6% move in IV before the stock ripped. That was when I bought all those like out of the money calls. Was the movie Pursuit of Happiness a story of your life? No. Can you overstate how important real-time options pricing is if you want to trade? I mean, the problem is you're never going to get real-time options pricing unless you're an institution. So even all the platforms that and this is one of the reasons I don't really advertise a platform on the stream. They all advertise real-time options pricing, but very, very, very rarely is that actually true. Is entropy swap in place because Melvin going under equals closing their short positions? I don't know if there's an entropy swap in place currently. There could be. Did you see the first episode of Barry? Season 3 came out. I did not, but I can't wait to watch it. More downs tomorrow? I mean, it looks like we're bouncing a little bit. So that's cool. Does WeBull have a trailing stop? I use IBKR. So a bit lacking on that front, even though there's always ways around that. So IBKR actually has trailing stops. You have to put them in yourself and like you have to program them, but you can do trailing stops on TradeStation for options. Webull does not have a trailing stop for options, but it has stop limits, which I watch my positions all fucking day, so I'm fine with that. Is a decent way to hedge bad tech earnings by shorting some of the larger SPY holdings that have already had earnings that will move in sympathy so you don't have direct issues with IV. You could potentially. I mean, the sympathy moves aren't necessarily as strong though. Or and the risk you take there is that the move isn't strong at all. And that, the decline in other tech stock prices is already priced into the underlying. Say Google moves down hard but like that's already priced into Netflix, right? That kind of thing. Oh, Elena, the reason they release it one episode at a time is because if you subscribe to watch it here, and it's got 12 episodes, they've locked you in for 3 months for one price. So you're paying the cost of impatience. Remember, everything is designed to charge you for Theta. So you're paying 3 months of Theta on your HBO subscription to watch all 12 episodes because they release one a week, even though they already filmed them all. And so, what you do is you just simply wait till all 12 are released, then subscribe and watch the fucking show. And then you cancel and get your prorated amount back. you're saying that we can avoid content Theta by simply sharing passwords. Brilliant. Well, or just briefly subscribing to see the thing you want to watch and then unsubscribing. In and out, right? Like a trader. I wait till all the episodes are out, then visit Pirate Bay. I mean, literally the reason we can't have nice things. Life insurance, same like Theta. Yeah, it's in case like the Theta on your contract is canceled early. End of day poll on chat members who have read book on your suggested reading list. I know you've read Zero, Moonwin. Don't worry, your Hooked on Phonics package is in the mail. I didn't assign any reading homework. Just don't answer if you haven't read any. First few pages isn't an option. People who bought but haven't read the books. Redo the survey. Why? It's fine. You don't need to answer Zero in chat. I don't care about the data. It's meaningless to me. It's on the the Reddit in the wiki. I think it's about the same as yesterday, Baradactyl. Ah. I've only read the seller box to DD. That's it. I heard the author of that received death threats from themselves. Is that true? Imagine writing DD so good that you have to threaten your own life. I think that's something we could all aspire to be. Started reading Everybody Poops. Now I'm making so much money on cat calls. Will you read the books to me? It's like in Back to the Future when Future Gert comes back and tells you to not write the Book of MOASS or even bother streaming. Ugh. If only he'd told me sooner. Going forward, what kind of price action do you expect in the coming cycle? Oh, backhanded compliment. That's hard to say. Moving into the pre-split environment could be very interesting. I don't think upward price targets are going to matter that much. I mean, we're going to follow Gamma Max and pay attention to that, but it could get pretty crazy. Remember that day you read a whole SEC report to that shill? I do. It was fun. Grain and potable oil is getting interesting. How's your wheat doing? It was up today, I think, a little bit. I have oil and grain also. I bought some JJG. Give myself some exposure to that wheat index, wheat sub index. Quiddity. Can you explain what may happen with options when GME splits? I'm looking to accumulate some GME leaps at the bottom of the Wyckoff stage. Yeah, they also split. Everything splits. It's a split. So options are just worth more underlying shares. In the event of a split dividend, in the event of a forward split, the number of contracts you have is simply split. So, you know, a 4-to-1 split would mean one contract becomes 4. In the event of an odd forward split where the ratio is uneven, the underlying contracts become worth more shares. It's completely determined by the OCC and how they want to handle it, and out of your hands. I think in the past there have been instances where they just haven't split the contracts at all. Like, I mean, there's a risk to carrying them through. I don't think so at a stock like GameStop, but there is one. It exists. It's minimal, but it's there. Was that the guy that was threatening you with receipts? I don't remember who the fuck that was. You're expecting Ivy to pump on GME before the shareholders meeting? Yeah. Are you planning on selling any shares during these cycles? Or are they just for the potential squeeze? I'm not selling any shares, but I don't need to. I mean, if I wanted to sell shares, I would just sell covered calls, right? And keep my shares. I'll just keep my shares forever. I have no reason to sell them. GameStop's not going back to my cost basis. Uh, I mean, I have shares of Tesla for the same reason. Like, I don't even like Tesla as a company. I think it's wildly overvalued. But my shares are so cheap, like, I'm not gonna fucking sell them. Just hold them forever. I sell covered calls on them. They make me money. Contract strike splits too? Yeah, of course. So in the event of a share split dividend, right? You have say you have one 50C, and then the split is 2-1. You will get one for 100 shares. You will get 125C for 200 shares. In a forward split, so this is for a split dividend. In a forward split, like a standard split, you would get two 25C contracts. JetBlue calls not doing so hot. I didn't buy any. I forgot. I'm sorry, turd. Are they not getting bought out anymore? It's because they don't have to wear masks. Why is there no zero option regarding the suggested reading poll? Just don't answer if you didn't read any. It's simple. If you've completed none of the reading and there's no available answer for you to click, don't click it. You don't have to participate in every poll that's presented to you. Picked up 90 shares of BBY. Is that good? I mean, you probably want like 10 more. 100 blocks of shares are better because you can sell calls on them. But, you know, up to you. It is clipped, I think, Elena. I'm pretty sure I clipped that. There is no prize. It's an anonymous pool. CC's still worth it without much active management? If so, how farther dated? Out of the money is still sensible, obviously. I mean, you can just set stops on them to protect them, right? You shouldn't need to actively manage covered calls. I sold these, you know, I'm not managing them. I'm here, which is, you know, but I could manage them, I guess, if I wanted to. Do you have thoughts on Visa earnings? I think they'll beat. Not only do I think they'll beat, I think Visa's super fucking cheap right now. I'm still not buying anything until after earnings, but I think they'll do well. I have some, well, that's a lie. So I have some 210s from yesterday that I'm still holding, but they're kind of far dated. They're not really there for leaps. I know we're in a war right now and a possible recession, but how come no one is talking about the COVID resurgence? Puts on travel. I mean, no one's talking about it because it stops people from making money and they don't like to talk about it. Mostly. But yeah, probably not a terrible idea. I think we've now just fully accepted that the economy is more important than human life. Thoughts on mastering the trade, TTM squeeze guy, and trading in the zone. I've already read everything else you recommended. TTM squeeze is nifty, but it's not. He's kind of a shithead. I mean, if you've read Options as a Strategic Investment, read it again. Understand the shit out of that book. There's more advanced options books I can recommend, but you might not like them, or if you haven't had like calculus, that can be an issue. Why is there no? Because it's. I wasn't asking you, Gaff. Isn't it awfully late for your lunch? Since the split is a dividend, is there a chance the value goes up beyond pre-split? One share worth 150 becomes two shares worth 85? I mean, yeah. The price of the stock can go up after it splits. Sure. That's the risk. So say GameStop is trading at 100, right? Just for the ease of the math, and it splits 4-1, right? As we move towards the split date. And it splits at 4-1, giving you GameStop shares at $25 each, and free float or a shares outstanding of 300 million, right? And then massive FOMO comes in because GameStop's $25 a share, driving the price up to $50. That's still the equivalent of this being 200. It's all an equivalency. That's an abacus. It is. The affordability of the books was considered before they were recommended. What Power Hour song? I don't know what you're talking about, JC. I have 3 abacus newly purchased. What are you going to do with them? We haven't gone below 126. Yeah, we haven't. What time period and candles are you using? It's the 1 minute, and I'm using Hankanashi candles, which smooth price action. That's why you're not seeing any gaps. Yeah, I mean it's the same thing. Supports and resistances should divide equally. I don't even actually, you don't actually have to do anything, right? They just do it on their own. Or they do on TradingView. It just splits, right? So everything on the chart remains where it is, and the price just, like, the y-axis value just changes. I accidentally bought the study guide. Does the edition of the book matter? Not so much. You don't have to get the latest one. Anything within the last 5 years is probably fine. You can get them used. Yeah, you don't need to. I don't have a deal with the publisher to make money off of you buying it, so yeah, all the editions are great. Just don't get one from like 19 fucking 70. Where's the book list? It's on the Reddit. I can just tell you what they are, Gaff. You can tell me if you disagree with them. Because I'm sure that's why you want to know. It's intelligent investor, securities analysis, technical analysis of the financial markets, and options as a strategic investment. I disagree. Of course you do. Everyone loves intelligent investor and hates securities analysis. 50 shades of call options. Against the gods? Yeah. It could. I don't know. I've kept it kind of simple. There's one book that I wanted to add that I can't think of the name of. I need to find it. It's shelf somewhere. You just want people to start discussing fucking risk management, which is all this is. So you finally have someone on your side. Oh, the places you'll go. Pop on pop. I want to trade like DFV, get in super early, believe in my convictions, fairy tale ending. Good luck with that. I think everyone here is well aware of how the market is stacked against them, Gaff. If they weren't, they are now. How much does a strategic investment save my life? I had an adrenaline rush. I was able to lift it over my head, and it came crashing down on my invader, rendering him unconscious. Because Tesla didn't short squeeze for the 9,000th time. The price did move. You're just not seeing it displayed on your chart, Silver Reserve, because your chart's already divided by the split. So the split is factored into all historical data on the chart as well. So you don't just see the stock, trade here pre-split and then go like that post-split. Yeah, it's just factored in, so nothing changes. I mean, there's lots of DFV-esque stories. It's not like 7 billion to 1 odds. I mean, I would argue that the odds of investing $50,000 into a company and having a large percentage turnaround are definitely better than the odds of winning the lottery. But, they're still slim. Definitely to the degree in which DFE made money. The percentage gain on his investment was incredible. But no different than somebody who invested, $100,000 5 times for a fifth of the percentage gains. That's fair. I might add it. I'll consider it. It's not a bad one to add. I agree, Gaff. If V beats tonight, will it go up tomorrow? Probably. I don't know. I have 2 10s. They're kind of far dated. If it goes up, it goes up. If it doesn't, I don't really give a shit. For HD, I just sold at the top today, and I'll re-enter when it's hit a bottom. That's all. I just have stops. Sometimes, yeah, I'll take part of the profit out and then roll it down while it chops. But generally, I'll just get out at the peak, buy back in at the bottom. The move on Home Depot is decent, but it's not insane. I wouldn't really say DFV was a trader so much. He was a investor. Kind of a different approach. A little bit. Some would argue vastly. I don't think it's that big of a difference, but why would you think Gary Gensler wouldn't be corrupt? You think you get appointed to fucking head of the SEC because you've got a perfect track record of, well, anything? I mean, didn't he work for fucking Goldman Sachs along with like Bezos and half of the other wealthy elite? Swing trader? A little bit. I think he did do some swing trading. I mean, the fact that he's using technical analysis means that he's doing some trading. He's mostly observing long-term trends, but his buy and hold periods were pretty long. I mean, I think he intended to be in GameStop for quite some time, and likely still is. Why is X down? Why do you care? If it's still down in like January, then bitch at me about it. Don't disparage Gary Gensler. He's only been on the reformed straight and narrow of an upright, honest regulator for 53.14 weeks. He'll get around to protecting retail soon. No one's making blockchain stocks. The reason they don't serialize is because they don't want to, Stefan. It's not because it's more fair or honest. They don't want that. No one wants a fair, honest market. And the most ironic thing about this is people who own GameStop don't want a fair and honest market. They want GameStop to squeeze, which would never happen in a fair and honest market. You can't have both. They want their cake and they want to eat it too, because they don't understand literally anything about what's going on. They're worried about like layer 2 protocols and Ryan Cohen's latest fucking shit tweet. And what's going to happen on Cinco de Mayo. Fair markets suck. They're fucking boring. That's why all the Japanese traders trade the US market. And their central bank. I want a fair and honest market after the squeeze when no one cares. Yeah, exactly. They also want to eject themselves from the financial system because they don't trust it, yet they want to reap the rewards from it. I know. It's peak Dunning-Kruger. Just still dumb as dirt, but they think they know it all. Man, there's actually really good money to be made off these $10 price swings that happen almost daily. Yeah. No, short squeezes are indeed fair. The accumulation of short position that exceeds the amount of a float is not. What's your bear thesis, Dork? Nice. I mean, that's what Amazon is, right? It's just a stock exchange for goods. It's the NYSE home store. Been a while. Thoughts on DRS still the same? Never changed. Is it even possible to have a bear thesis going into this next cycle, assuming Cohen lines up the split up with OPEX obligations? Well, first of all, OPEX obligations aren't accruing at a massive rate currently. But yeah, you should always have a bear thesis because you need to know what could go wrong. Sort of bounce is realistic for a V earnings beat. I don't know. Break 210 again. Maybe 220. It does like to climb from 210 to 220. I don't give a shit what you do with your shares. If you want to register them, register them. Doesn't matter to me. Fair enough. The whole concept of MOASS is an incredible opportunity to take back from what has been an unfair system, then advocate a fair market. Nobody's asking for MOASS 2.0 or 11Zs. I think the point of MOASS is to make money. Anybody adding ideologies beyond that is fucking blowing smoke up their own ass. Because it works. It's an efficient system at, making sure that those that have lots of money retain their large amounts of money. All that happens is you just have a shift if poors make a shitload of money off of the market, right? Then they will just want the same protections that the rich people want now because they're now rich. Does DRS actually remove a share from the books of the DTCC? Not from their books. I mean, they're still ledgerized. Like computer share ledgerizes them. They're still on the books. It removes them from their control. What are the readings? Have I read them all? I don't know. Have you read any of them? Technical analysis of the financial markets is kind of boring, but it's a little more fun because it's TA, not actual research. Everybody's gonna go to the fucking virtual meeting, Hestia. Stop trying to get people to DRS their shares. They're just gonna play the fucking meeting on YouTube again. I have not secretly DRS'd half my position. Are the Super Stonk mods going to the meeting this year? Oh, Jesus. Another hoedown. Hoedown at GameStop corporate. Can't wait for Google and Microsoft earnings today. I feel like this is going to be a big indicator for the next few days of trading. Yeah, it is. And if they can take a break from WoW for long enough, they'll be there. Will Satori be there? Could be worse. Could be anti-work. Can you explain how gamma screws works to drive price down? Because more and more OI on the put chain moves into the money, which increases the negative delta hedge from the market makers, assisting the short positions and driving the price down. CNS depends on how you guys bitching at each other. I'm working on a video for covered calls. Just imagine a bunch of SS pigeons running around Texas shouting, dearest mashers. No problem, Zach.
What am I doing? What are you talking about? Oh, Jesus Christ. The only way to understand MOASS is to run RC's tweets through a serial box decoder ring. I have 100x 250C for Facebook tomorrow. Tell me I'm an idiot. Yeah, it's pretty fucking dumb. Good luck. I hope it pays out. I mean, you'll get rich, right? I have one apple and my boy eats two. How many did he boof? 0? Because you ate them, right? You can't boof something you ate. Reverse boof. What happens probably tomorrow? I don't know, it'd be nice if we bounce. We could more sideways on this resistance. We'll see. Call interest wasn't particularly high today. A little bit coming in, but it's not too crazy. It was all right. But interest was a little high. But I mean, a lot of those were sold. So it's picking up. It may take like another day or so, especially, you know, now that the market's just kind of, well, I don't know. We may dip a little more tomorrow. It'll depend. If the market can recover, move back up to like 425 ish, we get some of that active fund pressure, I think we might see some more call interest come in. But right now, call interest is low. We're chopping on resistance. If the shorts want to take advantage of a situation, this is probably it. If they do want to drive the price down again. I bought more BBBY today, like a little bit. I'm mostly just averaging down my position with covered calls now, but 15 is a very good price. Are you prepared for when DRS numbers for the next earnings are lower due to people transferring to sell covered calls? You're gonna get accused hard. I don't give a shit. I'm already banned. What the fuck do I care about what that community thinks? Why would I actually give two shits at this point?
Good. That means people are actually making money on their fucking investment instead of watching it depreciate before their eyes. What if people shouting "HODL" the loudest were just the ones selling? The mantra should have been buy, hold, and sell CCs. You're eating Chipotle in honor of their earnings? I'm not gonna eat Chipotle. Sorry I missed your call last night. What's up? Seriously though, I sell a couple CCs and then buy a share of GME every week. It's awesome. Nice, Arugus. So theoretically, short hedge funds pushed hold and DRS to lock up shares and drive up volatility so that they can profit on volatility while we sit here never profiting. Kind of works, right? I mean, if there's a way to make money in the market, someone's doing it. If I join our Pickle Financial, will you ban me? No, never. I'll mod you. I'll mod you so that RSS will never take you back. Just to extra certification on your shill form. Gonna get in on Hog or what? I don't know, man. After that JetBlue play, I don't know if I want to get on your Hog. Shilling me blue balls, and now you're trying to get me to ride your Hog. It's kind of ridiculous, turd. What do the green lines between the futures roll dates on the gherkin trading view indicator mean? Oh, don't use that thing. I don't think it's updated at all. It wasn't right to begin with, and it's definitely not updated. Sir President Hot Body Joe OBE. Would you recommend someone to swing trade with 2K? If not, what would be better? I wouldn't recommend anybody trade unless they understand how. Roberto, is 2K enough to swing trade with? Yeah, it can also be lost really quickly. Carrying positions overnight, especially speculative ones, is dangerous. Day trading's arguably safer. When calculating the price of an option, the Black-Scholes model should be using the Series 4 of the IV or this, or the IV of the strike. IV of the strike. Down 2K on my Tesla calls. Sorry. That sounds like down 2K on my Tesla call. Ooh, stuff on hog. Ooh. When's their earnings? Tonight? Yeah, no problem, lit spaceman. Spy dead. It doesn't look good, does it? Ooh. Rough close. No, GME is not today. Die, spy, die. My puts depend on it. Difference between Long Johnson and Zillionaire. Access to the trading Discord. Primarily. They said that last month too, pickled hole. Or well, January. How far out of the money are you generally selling your BBY covered calls? Like 0.25, 0.2 delta? You have to sell a little time on them or they're fucking worthless. Is the trading Discord focused on options? No, it's got both. There's lots of people who just day trade. Things are this bad. You can sure very rich are losing money. And for those of you that seek justice, doesn't that comfort you just a little bit? The effects of a decline in the economy on the poors are far worse. The rates of suicide and unemployment go hand in hand. Believe me, the comfort is unfounded. Rough close on the SPY today. Jimmy kind of holding its own though. Not too bad. Still stabilized, holding above that LPS. I guess we kind of got everything out of today that we expected to get out of it. We do have a bounce, however, minimal on our support there earlier today. I don't think we're trending back up tomorrow. With money getting pulled back across the market for GME, I think we're going to see a little continuation of this chop, if not more downside, as the market continues down. So be prepared for that. If the market's going to drag us, we're absolutely going to get pulled through support, especially without any significant long interest. We did see some calls accumulating today, but it's minimal. Probably not enough to raise delta neutral significantly in any way. So I don't think we're ready for a move to the upside yet. So more chop until interest picks back up, which likely won't be until the market turns around. Hopefully the incoming FTDs will be high enough that we will see a little bit of stabilization against the drop in the market, and have those FTDs kind of protect our price. Not that they're going to improve it, but they could stabilize us a bit. But overall down 6.14% on the day, closing at 127.60. Thank you guys so much for tuning in, and I'll see you bright and early tomorrow morning. Interesting. Wait, did it actually halt into close? I don't think it did, right? It just ran up a little bit. Can't halt in after hours, yeah. Good night, guys.
Kinney's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kinney's.
It's yours?
No,
Your mother said she found it in your closet.
I don't know. One of the guys must
Must have what?
Look, Dad, it's
Where
not.
did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
We're not a cult, yo. Just some pickle themed fuckers, not a cult, no. Like them AMC suckers, not a cult, bro.
Sit, Crean, sit. Good dog.
Hydrate!
Hydrate!
Did you get any of that?
It's a good show.
Not an advisor. Frigulon.